Hey everybody, welcome back to the Capital Mindset live show. Okay, so I'll be looking over to the side here because I'm actually completing something at the same time, but for the most part, my attention will be here on the stream. So I actually have a decent amount of things to sort of discuss, you could say. Wow. Okay, so that was just a quick update that just like the stream just said, oh, here are all the people. Okay, it just showed up. All right, so let's see real quick the comments to kind of get us started us off. Okay, so you'll see the show after Rue. I can't do the Rue guys. I try my best. You listen to Patrick Boyle. I love to hear what he had to say. I guess I agree fully with the liquidity crunch time for the market. It's happened in the past. Relieved situation. Power printing. If so, what about this time? Okay, so here's a kind of a question to get us started. I fully agree that we're in a liquidity crunch time for the market. When has this happened in the past, and what relieved this situation? Public power printing, if so, what about this time? It's not necessarily about the Federal Reserve. It's more so about where is borrowing happening? Because in the United States, we are a debt-based system, and that's actually part of my remarks here that I have planned for today. But you need to see lending growth, and if you don't see lending growth, then you don't see actually the continuous support that a debt-based monetary system really needs. So it's more about seeing and watching how, in relation to, like, let's say the banks, when we saw the banks report, they were actually describing the situation perfectly, that they were seeing declining lending growth. And so that's a little bit of a concern. So we've already seen, let me actually move the camera slightly, so a little bit better there. We've been seeing a lot of, I guess, earnings reports kind of validating this. Today, the theme is the retailers. Okay, so the big retailers all reported today, and that's actually the I guess prepared remarks. It's not really prepared remarks. It's like an outline to keep myself organized when I discuss this. Okay, so but we'll get to that. We'll get more into this. Costco next chopping block, super overvalued. I mean, Costco, when I took a look at it, it looks like it's overvalued, and that's going to report next week. I mentioned that in the video that I haven't released it yet because I was trying to not spam too much content out, but it is uploaded. It was filmed, so I'm probably uploading that, and I'm going to upload an ARK Invest reaction tomorrow morning, so keep an eye out for that. And one more thing, if the internet ever gets choppy, it's because I'm working something else right here on the side. So, and I have to get this done too. All right, so I think it's inevitable Costco come down. Okay, so you guys have a conversation with Costco. All right, so I'm going to start working with these this outline that I basically have that I want to talk about. So first on the list is Crocs. So I want to talk about Crocs because I've been having a lot of questions regarding Crocs. Okay, so what about now? So I had a bit of a concern with Crocs as far as how the business will perform into the future. That yes, they've been performing very well lately, but how will that extend into the future? And that was a bit of a concern I had in my previous video. I think it's the only video that I have on the company. And at the time, I think the company was trading at about $86 a share, something like that. And today, just to remind myself, because I haven't actually looked at it today, Crocs stock is at $55.24. It is down 3.46%. Yeah, over those past 6 months, it is down a whole total of 68.52%. So not performing well, you could say the least. And I guess also want to do an update. We're going to actually skip point number 2. I'll come back to point number 2 later. But the liquidity crunch with the retailers, because Crocs kind of relates into that. We saw Target report today, lost a quarter of its value. Absolutely hilarious, because you can add that to the list of companies that have lost a quarter of their value in a single day. We also see Walmart, or we saw Walmart report earlier this week. Costco's reporting next week. We already saw Amazon. So what do we learn from all of these companies? Well, for one, we've learned that Target, a lot of their spending is in discretionary, or not spending, but a lot of spending that occurs in Target is discretionary. Walmart, same thing. And that's actually the biggest portions of their business is that. Costco is going to be a unique case in the sense that they still generate the vast majority of their profits from the membership part of their business. So they're different from Walmart, because Walmart and Target generate their profits primarily from retail sales, but Costco generates the majority of their profits from those memberships. Similar to the Amazon Prime model, but Amazon's a unique case on its own. I would not like to compare Amazon to the other three because Amazon has AWS. Something that I am personally quite a fan of, and have some, I guess, familiarity with it in that sense. But regarding the other three, Costco, Target, and Walmart, of course, they're getting smacked down. If the consumer is getting squeezed, which is exactly what we're seeing in their reports, they're going to struggle with their sales. And so it's not about the sales growth, actually, because I'll address this in the dedicated video, which, again, I'll just upload it at the end of the stream. It is uploaded. I just got to actually set it to public. I want to focus on particularly the margins. And so I've talked about them briefly in the past when subscribers have asked me about Walmart or even Target. These companies, I know that a lot of people out there think they're these big, massive corporations. And yes, they are these big, massive, scary corporations. But the margins are so slim that any little error can actually cause a massive drawdown in their profits. Because I think Walmart has profit margins of about 4 to 5%. Target, about the same thing, 4 to 5%. Costco, again, a slightly different business model. And then Amazon, of course, is a different monster altogether. But focusing on that, if you have a inability for them to pass on to the consumer the costs equal to that of them acquiring the products, you have a problem. Because in that sense, if, let's say, their cost to acquire goods rises by 5%, but they can only raise the prices on consumers by about 4%, that delta right there, well, that's lost on their margins. And that's going to come out of their pocket, not necessarily ours. It's good for us because it keeps the prices relatively the same. So on to the next bit of stuff I wanted to talk about. We have Warner Brothers Discovery. To kind of update you guys, I'm probably going to do a solo video on that one now, because I need to get a video out for you guys. And it's a stock that I'm interested in. So I'm going to be doing kind of a reaction video to their earnings, but I want to talk about Michael Burry's 11% stake, or he has a big stake, I guess. And he bought, actually, I was looking through what he was buying. It was very similar. He's buying Meta, he's buying Alphabet, and he's buying Facebook. So really interesting there. And then he sold some other stocks, or he shorted Apple, which is really interesting because I'll kind of also share a bit of what I kind of talked about in the Discord lounge discussion, which was I'm kind of like I'm hesitant to say the liquidity crunch is over until something like a Tesla or Apple is re-rated. And I think he's kind of like thinking the same thing. So with regards to Apple, him shorting Apple, I think it might work out, okay? Just because it might get re-rated. Not that the company's bad. It's about the levels that it's trading at. And he's buying Meta. He's buying Meta. Did I say Facebook? Well, interchangeable. But he's buying Facebook, Alphabet, and also Warner Brothers Discovery. Okay, so also with Warren Buffett, we have to talk about Citigroup. So he just bought Citigroup. Let me make another quick adjustment on this. So he just bought Citigroup. Also, he bought Paramount. Okay, so those are the two I wanted to talk about, because Paramount is another streaming service associated with Paramount Plus. I don't really watch Paramount Plus, but I know it's there. And just because I don't watch it doesn't mean it's a bad company. Now, Citigroup is the one I want to talk about. So Citigroup is a holding within the portfolio. And technically, my cost base is slightly lower than Buffett's, but whatever. You guys know that I only held Citigroup as a speculation that they might improve things. I have added one extra bank. You probably have seen that update recently. I haven't had the time to create an update video on the portfolio, but regardless, Citigroup's in there, and the reason why I hold Citigroup is under the speculation that they can improve things, because it is a lower quality bank than something like Bank of America and JP Morgan Chase. But regardless, Citigroup has its value. It's heavily exposed to international businesses, and I had a lot of other suspicions about counterparty risk in Russia, because there is a lot of international exposure. A lot of the exposure we can measure directly, but then a lot of the exposure we can't really measure. And we call this, the extra counterparty risk. I just actually released a video on Voyager Digital. I had a little bit of a discussion in that video about counterparty risk, because it's really interesting to see that how much Voyager really lends out their crypto assets to other entities. And I'd say that's pretty risky, but some people don't think that's risky. All right, so on to the continued remarks. I have actually, and let me actually switch you guys up here. So I'm going to put you guys on this side. It's better for me. All right, so let me see if there's any questions here. Citi is not an ADR. No, Citi is an American company. Julius Caesar just made 15% honest. Pretty funny. Yeah, it's pretty funny. Honest about Michael Burry's actual position in the market. Yeah. I don't know what anyone else has been saying, what other people have been saying about this. All right. So on the continued remarks, the Federal Reserve's behavior kind of indicates exactly what you might think. They're trying to get stocks to come down. They're trying to bring down demand. All right. So if you remember from economics class, you probably learned this kind of stuff in your macroeconomics class, in your basic macro or even your intermediate macroeconomics class. The Federal Reserve is engaging in behaviors again, even if you're Snyder pilled, you can understand that it does affect psychology within the market. They're trying to bring down the market a bit because of something known as the wealth effect. And the wealth effect is, in essence, kind of simplifying it. If stocks go down, people will spend less money, and spending less money brings down aggregate demand. So that's a little bit. So data isn't very clear on exactly who is selling, right? So we've been talking about the speculation. Okay, it might be retail. It might be hedge funds. Who knows? We don't really know exactly who is selling, because the data in the foreign markets isn't very clear. Okay, so a lot of buyers, let's say in, for example, sovereigns, we don't know if there are sovereign entities that are actually selling a lot of these bonds, so to speak. So, but what I want to actually point out is the potential for a slowdown in credit to actually lead, and this is where we're getting into like the meta of things. If a slowdown in credit persists, the banks won't have really much option but to then buy more treasuries, which actually could lead to declining rates, by the way. Don't be surprised by that, okay? Declining rates might still happen. Okay, you're saying mainstream media is acting like Michael Burry is the only short Apple, and that's his only position. Yeah, exactly. So, okay, so that's what you're talking about. Yeah, exactly. So he's not entirely just short a stock. So he has long positions. He has long bets. He's just short a particular stock. He's running a long short portfolio, which is a hedge fund. That's what a hedge fund does. So long short portfolio. Anyways. So slowdown in credit is kind of oxymoronic with rising rates because banks need to lend. That's how banks make a lot of their money. They need to lend. So they need to lend to someone. You deposit money in the bank, they need to grab that money and they need to find someone to lend it to. If lending growth declines, this spells a problem for banks' earnings. So they got to put the money somewhere. Well, there you are. There's the treasuries. Treasuries are right there, willing to be bought by the banks. Those are the primary dealers and such. So as lending starts to slow down, we might see actually money start to re-enter more and more the bond market. Okay, if lending starts to slow down in the mortgage sector, in the car loans, et cetera, all that, I'm long TTCF, short in my pants. That's funny. That's funny. All right. So regarding further discussion on the kind of like the Fed, and kind of we'll close off on that and we'll go to other things, but we do see that typically foreign buyers are the largest buyers of dollars. Foreign demand is actually very strong, as discussed briefly in the last live stream that showed relative US dollar strength. Someone asked me about, what I think about the US dollar strength more recently. That's what I think about it. So typically foreign buyers are the largest buyers of dollars. And so because we are a dollar-based system globally, the goal of a foreign central bank is to actually accumulate some dollars. It's good to have dollars, basically. It's simple put, it's good to have dollars. And then treasuries are a form of dollars that have a yield. So because regular dollars don't have any yield, you might as well have treasuries. So they're usually the largest buyers in that sense. So we also quite obviously live in a debt-based system. So we rely on continuous debt. And I would say that take a look at China. China is going through the liquidity crunch before us. And I discussed that in previous China videos, that they were going through this liquidity crunch right before us with, one of the symptoms you could see, or the blowups, was like the Evergrande situation. And so we see that their lockdowns, they're kind of not really making any sense. You might make the case that, they're trying to sabotage the US economy or sabotage exports, and by implicitly not giving us the products we need and kind of causing inflation within the United States. Some people are making that argument, but they are actually shooting themselves in the foot. And by the way, I don't know if you guys know this. There's some news I saw about Xi Jinping having a brain aneurysm, which is really interesting because he might actually get, pass away. And I don't know what that's going to happen, but regardless, we'll put that to the side. I just wanted to let that out there. There's this discourse about that going on. So also we do see the delinquency rates in China rising. Of course, data on the delinquency rates in China is kind of murky at best, because as all data from China is, it's murky at best. But the data, what I've seen, it shows that delinquency in China is rising at a more rapid pace than what we would previously be like where we noticed it. Basically, we noticed it. We're like, oh, that's noticeable. And then so maybe if you think the delinquency is that's probably a good number, and the real number is probably worse than that. And it kind of makes sense if you think about how severe the lockdowns are actually taking place within China, and how that's probably having an actual real effect on their overall economy. Starts to make a lot of sense. People are like, okay, do I pay this or do I pay my debt? I'd rather pay for my food, for example. So a lot of delinquencies, not surprising really based on what they're really doing. It doesn't make sense from a international policy standpoint to do this to themselves, because they do need dollars. Their system does needs a lot of dollars, and the lack of exports is kind of like squeezing them a little bit on the dollar front. So consumer squeeze, though, we are seeing that again, returning to that concept of the retailers. They are getting crushed, okay, because the consumer itself is getting crushed. So debt levels are actually pretty high again for the consumer. We do see worker wages have actually not increased to the same pace as costs have increased, which is a bit of a concern. And again, all that kind of spells for a consumer squeeze for spending. And so we've talked about in the past how, for example, when we talked about the oil trade, well, the oil trade was successful. Well, what does that mean for the consumer? Well, that means less money for you to spend on other things. And food, same thing happened with this conflict in Ukraine. The food prices globally are rising. So what does that mean for consumers? Well, they got to spend money on food and energy. Those are the primary, and housing, food, energy, and housing. And then you think about that cruise line, and then you think about maybe buying that car, that extra car. Or maybe buying a new car and getting rid of your old car. So those things come after. Surprise. And, people are surprised by that, but it's not really, but we also then kind of come back to that wealth effect. So if asset prices start to actually come down, I mean, we got the kind of like a perfect storm brewing here, where we can have like the wealth effect also taken into consideration the amount that consumers end up spending. And remember, your spending is someone else's income. So basically, with all that being said, I'll be surprised if we actually do end up with a soft landing. But let me end on a positive note. Of course, all this will eventually kind of roll itself over, and we'll be fine. We'll be fine. It's not the end of the world. It's not like time to go buy shiny rock, but which is funny because you think shiny rock will save you. But if things get really bad, shiny rock will not save you. But regardless, things will kind of get better in the sense that, okay, so the best cure for these high prices is these high prices kind of mentality. Of course, this is still not that bad. Things can get a little bit worse, in my opinion. That's just my opinion. I'm just projecting there, but the previous stuff is kind of like well thought out. This part right here is not that well thought out. It's just my opinion. So euro dollar, conventional textbook wisdom, kind of going back on this, and then we'll kind of address questions, and I'll be done with my whole spiel and speech, you could call this. But the conventional textbook wisdom states that the differentials in the interest rates actually determine where the value goes relative to one another. So for example, we have the ECB kind of lowering rates, or keeping rates low, not kind of moving with us, and we're raising rates so that we should actually be more attractive for investment, and therefore the dollar should appreciate, which is what's happening now. That's textbook. However, I'd kind of counter this with saying in 2017, and this is actually kind of more in Jeff Snyder's realm, that he would point to the 2017 moment, and he does this actually quite frequently because he always fights against this theory. This is economic theory, that in 2017, when the United States was actually doing the opposite, well, the opposite was occurring. So it wasn't actually going according to conventional textbook wisdom. It was kind of doing the reverse. The ECB was actually lowering rates, and the dollar was actually raising rates, or the Fed was raising rates. And in that sense, you would think that the dollar would actually rise to the euro. It was the reverse. The dollar was actually going down to the euro, of course. So, and why is that pertinent to what's going on right now? Well, if the dollar keeps rising relative to other currencies, it does actually make imports cheaper relative to domestic products. And that is supposed to be, this is again entering the realm of theory, supposed to be kind of good for hampering down inflation. All right. So now we're going to exit theory. We're going to exit the whole spiel. We're done with that. Answering questions now. All right. So let's see here. I'm going to try to skim through it, see if any. Okay. So thoughts on the best BBY. That's Best Buy, I'm guessing. I'm pretty sure that's Best Buy. So Best Buy, I don't really want to touch in a market where I think the consumer is still going to get squeezed. If I think the consumer is going to get more squeezed over time in the foreseeable future, then in that instance, I'd say it's not an asset ideally I would want at the present moment in time. Whether or not it's a good company is a different question altogether. But something like selling TVs, couches, consumer discretionary products, these things in this era that we live in is not ideal. Okay. Something I'd say probably grocery stores are surprisingly coming down today, but I don't have any exposure anymore. You guys probably remember I used to own Ingles. There's a video that I made when Austin was still on the show a while back. It was talking about some of our favorite stocks at the time. And one of the favorite stocks he was talking about was Albertsons. And my favorite stock in that particular video was Ingles, because the theme of it was grocery stores. I don't own Ingles anymore. But when I did own Ingles, it was a very unloved, distressed asset, small. No one really knew about it, family run. Had a lot of the makings that I thought were of a fantastic business. A strong capital allocation, in my personal opinion. They weren't really trying to be flashy with shareholders. Now, Albertsons, contrarily, was a little bit riskier from what we remembered, or I remember. The debt was a little bit higher. They had some partnerships with Google. And by the way, if you can't tell, my brain is actually multitasking right now, and I'm about to finish my task and then focus directly only on the stream. And we are focused only on the stream now. All right, cool. So that was my brain multitasking. Sometimes I absolutely can't handle it. Other times I'm better. But yeah, regardless, BBY, a little bit more concerned with it. Wouldn't really touch it at the present moment, my personal opinion. But you might, because I'm going to be honest, I'm not going to be very good with timing when the consumer is going to be good again. Okay, I'm not going to be good. So because of that, retail in that category is not going to be my strong suit. Okay, so now let's go through here. I see some of you are just seeing my Xi Jinping comment. Be buy rock. You want to buy rock? Go buy the rock. Shiny rock will save us all. Yeah. Thoughts on thoughts. Okay, so here we go. Target. Yes, Target does have higher margins than Walmart, but they still both have very low margins relative to other businesses. So very little room for error. If anything were to go wrong in either of these companies, they're not gonna do well. They're not gonna do well. And by the way, I want to actually clarify this, but just in case anyone thought, the revenue can still go up, but the profits can still come down. Believe it or not. Okay, and I'll express that in a second. Just telling that I have finished it. Okay. So, for example, let's say inflation kind of stays where it is, or the prices stay where they are, and they're higher than 5 years ago. Well, that should show up eventually in these retailers. It should show up and say, oh, now we have higher sales. But the profit margin, let's say they're not able to pass on the exact amount in cost increase to the consumer. Well, revenue is going up. And by the way, for Walmart and Target actually was going up. It's the profits that's getting squeezed. Again, like I say, the common phrase I like to say is you can't pay shareholders with revenue. Believe it or not, funny fact, right? Fun fact. You can't pay shareholders with sales. You have to pay shareholders with profits. Okay. Kind of makes sense, right? But yeah. So you don't want to go that. All right. So did you get the phrase liquidity crunch from Jeremy's liquidity crunch? You're joking. I know you're joking. Yeah. You're joking. But I don't know where he got his liquidity crisis from. I will say that before he said liquidity crisis, the popular investor said liquidity crisis. I don't know where they got liquidity crisis from, maybe the media or something like that. But yeah, thoughts on Warner Bros. Discovery? I like it. Okay, so if you want my spiel again, oh, sorry, I got it. I'm going to get back to your question. I didn't want to skip this guy's question. Isn't cheaper imports deflationary? Yes, no, that's what I'm saying. No, cheaper. Yeah, cheaper imports are deflationary. Yes, no, that's what I was saying. If I said otherwise, I apologize. No, because rising dollar value, okay, makes imports cheaper, which is deflationary. Because, for example, if we are not able, however, hold on, let me actually pause there. If we're not able to get those imports, is a different story. Because even if they might be cheaper to get them, if we can't get them in the first place, a little bit of a different story. We have a supply problem. But if, let's say, hypothetically, the supply is fine, we're getting in those imports, and those imports are coming in, and the dollar is rising relative to other currencies, it does make those imports cheaper, and therefore that's actually deflationary. So yes. So hopefully that kind of covers that. All right. So thoughts on Warner Bros. Discovery? Okay. Between the two, I like Netflix and Warner Bros. Discovery. Those are my streaming plays. Warren Buffett has Paramount. So basically I'm wrong. But anyways, I like Warner Bros. Discovery and Netflix. Those are my two. Those are the ones that I have chosen to get behind I've already expressed why I think so. Warner Brothers Discovery, not so much, because it needs its own video. It really does. And it's going to get it. It's going to get it. And I'm going to work on it this week. I didn't hear from the popular investor. He stopped like making videos recently, but regardless, I am a really small channel. So if he doesn't want to bother with a small channel like mine, it's completely fine. This is pastime. So it's just for fun. There's so much content to get through. It's absolutely incredible. Just want to share my thoughts on this stuff. All right. So why do you sell energy? Seems like a very undervalued sector in the current environment. No, it was undervalued when everyone thought electing a Democrat was very bad for energy. That's when it was undervalued. So now is when everyone wants it, and that's when I'm willing to sell it. I still have energy, by the way. I still have energy. I've just reduced the sizing in the portfolio. I've reduced it drastically. It's sitting, ConocoPhillips is sitting at about 2%. My Gazprom shares are frozen, but it's barely anything. So I consider the Gazprom value, let's say 0 for now. And maybe peace returns to the world, and then my Gazprom shares are unfrozen. That's fine, but I don't care. This is literally a test to see. I would rather own it and pretend the stock market is closed tomorrow. That's the test that Buffett says you have to pass. We'll pass that with the Gazprom. I'm completely okay with doing that, because I know what it is that I own. As long as my ownership rights are respected at the end of the day, then I know what I own. So I'm happy with that. And again, I'm kind of betting on peace returning to everything. But regardless, that's to the side. That's my exposure to energy. ConocoPhillips, I still have some. BHP and Rio Tinto are still technically energy. I think one of them, I think BHP is the one that mines for oil as well. So they technically have exposure to energy too. So yeah, that's basically my thought on it. I was bullish on it when everyone else was bearish on it. I took this phrase seriously. I was greedy when others were fearful, and now I'm fearful when others are greedy. That's simply it. Fabio, I find it interesting that Apple fell more than AMC and some meme stocks today. Well, it's because Apple, consider the valuation of where Apple was. And let me see, because AMC did still fall. So if I pull up AMC stock, and I'll start sharing my screen because I want to show you guys what it is I'm looking at. So we have some visual stimulus. Visual stimulus is important because we need it. All right. So AMC is actually down 1% today. And to kind of show this further, Apple is down 5.64%. Okay, so in a little bit of a lounge discussion I had on the Discord channel, which is like this audio ability I can have with the Discord members, is I discussed actually that I would be surprised that the liquidity crunch ends before the re-rating of Apple and Tesla. And this was, I think, on Monday or yesterday. I think it was yesterday's. So when the market was a little bit up, but again, but I also did state that it's really surprising now that the YouTuber community, which is kind of like a taste of how the retail sentiment is, it's starting to get more negative, which is very exciting to me, which always makes me want to say that we're like getting there. We're much closer. We weren't like we were in January when no one was kind of like bearish. Everyone's kind of like, buy the dip, buy the dip, buy the dip. Slowly but surely, people are going to start being like, I don't want to buy this dip. This dip's not the dip to buy, and then I'm going to be like, okay, really excited. And then I'll deploy capital far more aggressively. But I also want to state that kind of a commentary I've been noticing that private funds have been, or venture capital firms have been feeling a little bit of struggle in order to raise capital right now, which is giving me a sense of how the investor class is kind of viewing this. So the investor class is getting nervous. Retail's pretty nervous. I think that the media, the talking heads in media, they're getting pretty nervous, which makes me more hopeful. So I'm getting a little bit more hopeful. But that's just my preliminary thoughts. But yes, it is interesting. I find it interesting too, Chris. Also, Chris, I did see your comment, by the way, before I came on here, that YouTube unsubscribed you from the channel. I apologize for that. I have no idea why it does that or why it did that. It's not the first time I received that comment. I've received that comment many times before, that for some reason YouTube sometimes unsubscribes people from the channel. I have no idea why. I don't know if I'm not controversial, but yeah. Oh yeah, Joseph Carlson. You see, oh my gosh. Okay, so he's literally in the works. He's going to be released this week because he was the runner-up last week. So he's in the works. I think he's set to release on Thursday, which is, that's tomorrow. So he's set to release tomorrow the reaction video for his entire portfolio. And absolutely, I was going to actually pull up the Costco valuation that he did. And but Joseph Carlson, my Arlson, told me Costco's valuation didn't matter. I mean, we already had the mini roast, and I mean, I'll say it to his face. It's really funny that what he said about Netflix. During the Netflix video, I did showcase that he went from completely bullish, insane bullish, to just like completely questioning everything he's ever invested in when Netflix was going down, which is the complete opposite, right? You shouldn't be doing that, right? It shows you that the valuation that he did, he had no idea. He has no idea what he's doing in terms of evaluating companies, because he's not comfortable at all with whether he owns. And then or Target's another one. I know that because when I'm doing the video, I do dedicate time, and I have been watching Joseph Carlson videos while I'm working. I have Joseph Carlson here because I'm preparing for this video, so I can kind of get an idea of how this guy thinks. And so some of the videos I've come across was, Target, and he talked so good about Target. Target's down here today. Again, let's show you the bloodbath. I mean, but it's been down for a while. And again, Target was overvalued. It was objectively overvalued by, I don't know what evaluation process. Everyone has a different one. Let me be clear. Everyone has a different way to evaluate a company, but sometimes there are objectively wrong ways to evaluate a company. Okay. And I wish he would show the evaluation process. He doesn't really, he just talks about it. So then that's all I really have to go off of. If anyone has pointers to where I can find it, I'd love that, because that would make my job easier when I discuss his valuation. Okay, does your outlook for the S&P 30-40% Nasdaq Federal Reserves course, which would represent to the end of the liquidity crunch? Okay, does your outlook suggest S&P 500 done 34? No, I have no price targets whatsoever. And there's kind of reasons for that, because that's like a little bit of hubris on my part. So I'm going to accept much ignorance on that part. And so that's why, for example, if I said that, if I believe that, then I would just wait for that. Okay. What I say is I acknowledge that a event is probably in flow, and I increase my caution, but I don't necessarily create price targets for me, because mentally then that will make me almost it will make it impossible for me to actually then buy in. Okay, because then I'm going to be like, I'm waiting for that 30 to 40% drop in the S&P, which I think let's actually take a look at the SPY year to date. Year to date, yeah, year to date we are down 17.97% on the SPY. Let's see how the total world market VTI. Oh, sorry, not VTI, VT. A little bit of a brain fart there. All right, so brain fart. Okay, so 17.5%, and we can just do a comparison. That's actually better. Okay, so I want to compare VTI, and we'll compare SPY. Okay, so and I want to compare year to date. All right, so year to date, the total world is actually the least down. Okay, so it's doing its job as the least volatile, technically, of these indexes. And yeah, let's actually take a look at the QQQ. Let's see how volatile the QQQ has been. So the QQQ is down 27.52%. Really, yeah, pretty much as you would expect. So with the markets being down so much already, I mean, we're getting to the point where it could turn sooner rather than later. You'd be surprised, but I would be surprised if we don't have a re-rating on Tesla and Apple before that happens. Okay, that's my personal opinion. That's kind of where I'm going to make a stand on it. So it's not about the percentage down. I would say that I'm looking around for sentiment to be completely negative, or not completely negative, but a lot of people to be more negative than positive. You can see that, for example, in the Netflix video. I found it very fascinating that when I started to get really positive on Netflix was simultaneously the time when everyone was starting to get fairly negative on Netflix. I received a lot of comments saying that, for example, Netflix content is trash, blah, 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 blah. And, anecdotal and opinions are all valid. Your opinions are all valid because you are the consumer. You vote with your dollars. Maybe you don't subscribe to Netflix. I was looking at, for example, wider data, but I was excited. I got more excited when I started to see that commentary in the YouTube channel. When I started to see comments saying, well, Netflix, I don't like Netflix. I don't like Netflix at all. I think it's a trash company, stuff like that. I thought it's pretty exciting, but that's what I look for mainly. So price targets don't really have any for you. At work, we might come up with some estimations. So it might be fun. I'll tell you what, it's fun. Okay. Let's do it for fun. Okay. And just be very clear, this is fun. So just in case you didn't hear me, this is fun. This is not for serious measure. Okay, so I think the SPY, if I'm being honest, because I'd say wouldn't be surprised if we hit 300. Okay, 300, I wouldn't be surprised. But that's just for fun. Okay, like that. All right. Yep, energy, a bit of a late play. Okay, what does this say? Hello, Fabio. You mentioned that Burry having a long short portfolio. Would you consider doing a strategy? Why are you only longs now? Well, I mean, you could say I'm kind of like short-ish with my dollar position, but not really. You're right. I don't really like to focus too much on my mental energy on finding companies and predicting that they're going to not do well. It's not like some people who say like more shorting is immoral. No, I don't believe that. I don't really care. It's just that I focus most of my mental effort on finding companies that I think are going to be good and then just buying those. It's more of, you could say it's more of an act of laziness, to be honest. But no, it's because Michael Burry, he wants to work. He wants to make it work in all environments. So long short portfolio is necessary for that. I have no investors. I don't want stress. So I just go long and that's it. For me, it's a stress-free lifestyle. I buy and that's it. And you see, like I eliminate all the added stress of a long short portfolio, because the long short portfolio is stressful. It is very stressful because when some of your positions are going to be doing good, some of them are going to be doing bad or maybe really bad, and they can really hurt you. So you have to almost be very confident in terms of when it is you're shorting. And he shorts very intelligently. I think Michael Burry is very intelligent with the way he shorts. He shorts with puts, which is the only way I would ever short if I ever decided to short. Because it's a way of shorting. It's not technically short selling, by the way. But yeah, I think that's pretty much my answer for why I don't do it. Now how that's not how it works, Bob. If stocks goes up, it's a buy. If it goes down, it sucks. Yeah, that's how people react. Even though each and every time people say, this is, you want to be greedy when others fearful when others are greedy. People don't care. So energy was undervalued in 2020. Yes. This is exactly what I'm talking about, fake alias. That is when I was buying energy. I'm not buying energy now. I'm more interested in selling my energy. If anything, the last bit of my energy, I'm actually looking to sell it at kind of like the last squeeze. But I didn't want to take the risk. I wanted to take my profits. I wanted to store that cash into my account and then just kind of sit on it. What is, actually, out of curiosity, ATI stock? Yeah, so this one's not going to be moving as expected. So this one's kind of going to be flat until we get some like more color from this. But yeah. All right. At strike prices, multiples are still really low. At strike price multiples, I think that's Stripe stock. I forgot what their ticker symbol is, so I'm just going to Stripe. Google, be good to me. Okay, fine. Google's not good to me. Stripe public? Stripe. Oh, no. Okay, I guess that you guys were talking about something else. At strip prices. Oh, you're talking about strip. There's not any. My brain didn't work there. My brain did not work there. All right, so WB has a better IP than Paramount. I agree with that. So again, I like Warner Bros. Discovery for their IP. I like now that they're separated from AT&T. It makes them a lot more flexible. In fact, you see, like, I think I've had commentary on Verizon because you guys asked me about Verizon in the past. And remember, my commentary on Verizon was that I don't like Verizon, especially in a environment where, you have potential rising costs and a lot of debt. Remember that something like Verizon, they rely on constant new investment, all right? Constant new investment. Look at their debt profile. The debt profile basically is tons of debt, and that is necessary. That's basically the moat, by the way, in the current present moment. The moat is the debt necessary to build out a network like that. And same with AT&T. So, but let's kind of play with this idea for a second. We enter an environment where rates are rising and inflation is still rampant. So costs, at least to producers, is crazy, absolutely crazy. You're going to have to take on more and more debt at higher and higher rates, which is incredibly destructive to your bottom line. And I think Verizon's been kind of mature about this, and they've been actually using a lot of shares as well. So they actually are a net share issuer, if you actually take a look at that, because that's actually a safer raise of capital than the debt. And they probably recognize that. So I think I'll give them that. But I think Buffett's recognizing that too. And that's why he's exiting Verizon, or he's slashing down Verizon and then entering other positions, which I actually tend to agree with those other positions. I think, for example, his new purchases of Citigroup probably is going to be a little bit better because now the damage has been the market's been probably pricing this in for a little bit now. And so Citigroup, even though it's in the portfolio, I'm not really adding to it. I'm instead adding to my favorite bank, which is actually Buffett's number one and his favorite bank too, which is Bank of America. You guys probably saw that in the portfolio, but yeah, I'm better market penetrating. Are you looking to add ABNB to the portfolio? It looks like it's heading to under $100, still expensive. I don't know if I covered ABNB. That's Airbnb for everyone. So yeah, it's about to. Yeah, wow. Look at that. Look at that. I don't remember if I've ever covered Airbnb. There's so many stocks I really have to do updates on. There was Walgreens. Walgreens came down, and I saw a comment, and I remember I try my best to read all comments, old, new, all of it, when I can. Of course, eventually it's going to become nearly humanly impossible to do so, but I'm going to try to the fullest extent of my ability. Walgreens, which is a stock that I used to own in the portfolio, and for those of you who've been, a long time viewers of the channel, know that I exited last year at the tail end of last year, and Walgreens, there's I think there might be one or two videos on that stock, and then so someone commented recently that I should do an update because today, not too good, right? So they're down 8.39%. And so, yeah, they basically lost all their gains. They're going to get to the point where I bought them last time. So, because before they were having concerns. Well, now I think the concern's a lot more valid in terms of a threat from something like Amazon, which Amazon, I'm just hoping that, the market just brings down, like for Pete's sake, please bring this guy down. And a lot of people, by the way, I'll say objectively, and I'm on record now on the Amazon video, even though it's a holding within the portfolio, that it was overvalued. Okay. So the people who are saying it was undervalued at like 3,000 were absolutely insane. Okay. Absolutely insane. I mean, I'm not a genius for saying that. They were absolutely insane. It goes to show you that every time we're in a euphoric market, there's always going to be a lot of people that come out of the woodwork and then just say like, oh, super bullish. Everything's bullish. This stock's undervalued, even though it's ran up a lot and probably shouldn't even be there, without the added nuance that potentially was the pandemic driving up demand. So we're approaching back to levels in pre-pandemic, which is really exciting. Okay. Yeah. We're basically there at the peak before the pandemic. Yeah. That's really interesting. So it goes to show you that also patience can work out too. So, and it's not necessarily about timing the market at all, because even like if you were like, for example, I kind of explained this before, but if you find that your position is egregiously overvalued and the estimates you can't really justify, which was kind of like you had this entire time to kind of take some profits off the table, because over here the estimates you had to make were absolutely incredible, right? And you were going off of numbers where the pandemic was basically boosting these numbers dramatically. And I think that's what actually the market's not that stupid. I think that's actually why this flatline. I can't be for sure, but I think, just like a presumption, that I think that's what was going on there. Of course, you have to understand that Amazon, I primarily look at Amazon for its AWS component. And then as an added feature, they have the retail component and all the other sales that they can do to the consumer. I mean, absolutely incredible business. One of my favorite. But I acknowledge that it's my second favorite. Honestly, it would probably be my second favorite. My first favorite's obvious, but unless we have a once in a lifetime Great Depression, I don't think it's going to get that bad. But yeah, I don't think it's going to get that bad. We don't have like the same kind of leverage that was in the system as it was back then. So yeah, I don't think it's going to get that bad. But if it does get that bad, you can poo-poo on me from this live stream. You can come back to this live stream and comment that you were like, you were totally wrong. It was worse than you ever thought. I wonder if retail will start selling Apple due to recession fear, thinking iPhone and Mac sales will underperform. Look, retail will do what retail does. Retail will always do what retail does. Retail will always buy in the rise and always sell in the down. Okay, that's what retail do. This is why retail has very historical underperformed the market. So, and actually, if you actually delve into that study more, what is shown is that the vast majority of investors, why they underperform the market over longer periods of time, is emotions to the upside and emotions to the downside. Emotions to the upside can happen because you fall in love with the stock and you get FOMO. You probably know that as FOMO. That's the word used a lot. And then to the downside, it's fear. So fear and FOMO work against you as a retail investor, and you have to try to master that. And that's why index investing works so well. It's because you remove that from the equation. You remove that as much as possible from the equation. Of course, you can have FOMO and fear in an index because they still go up and down, but less so because the volatility is reduced. So that's why actually when you talk to like a seasoned financial advisor, they're going to say, okay, well, what is my customer, right? My customer is this type of person. Okay, so if it's this type of person, they're going to have different volatility demands. So maybe if they're older in life, they're going to require less volatility, or maybe even younger. Some younger people don't like that much volatility. And so you're going to focus on assets that have less volatility, or you're going to try to cater the portfolio, not cater the portfolio to this customer so that the volatility is reduced. And in that sense, you get a happier customer. Okay, pretty simple, but yeah, so I think that's probably the case. I apologize for sometimes going on rambles. I know I go beyond the thing. What are your thoughts on Tesla's? Oh, sell the stock. Yeah, sell the stock. What are your thoughts on Tesla's valuation? Tesla's valuation. I mean, okay, so I think I'm unbiased in this sense because I'm a customer of Tesla. Okay, and I actually just purchased a new vehicle, and the vehicle will come probably around August, July. Oh no, I think it's August, October. Let me. I always forget, so I have to pull it up, and I always try to check it daily because I'm a freak like that, just in case it changes. Whatever, it'll load in. Yeah, it'll load in, whatever. But oh no, there it is. It loaded. So August 28th to October 9th. So around there. So I think I'm unbiased in saying this, that I think Tesla's overvalued. I like the car, I like the company. The company I think will execute fairly well into the future. And actually, now that you bring that up, Tesla was actually kicked out of an ESG fund today, this S&P ESG fund, just so everyone knows. Love to hear your thoughts on that. But Elon's not too happy, and he's stating some stuff, and there you go. All right, so I'm hoping Tesla drops massively. If Tesla dropped enough, I would be a buyer of Tesla stock. It's not something I'm actively looking for right now. Mike Stathis says that Joseph Carlson is a fraud. He's a soy boy. He's a soy boy, in my opinion. Well, I wouldn't go as far as to say like, well, I mean, like, I don't know if he knows what he's doing, but I wouldn't say he's not like. Well, okay, maybe because I'm doing a comparative analysis on like other creators. So like, there's some creators that are overtly fraudulent because they're basically making promises to their customers. Let's call them customers, not victims. Let's call them customers. By the way, check out Strongman's video on this particular creator and his company. I think it's a very good watch, by the way. And Cole, happy birthday, Cole, by the way, if you're out there. But anyways. He has no idea what he's really talking about, I think, but he's not like overtly like trying to defraud someone, right? So I think that's like there's a line for me when there's like overtly trying to defraud someone doesn't really know what they're doing, but like that doesn't mean that he's not causing damage, because it probably is causing some level of damage. Of course, I mean, I've been doing kind of like side research here and kind of watching him to kind of prepare for this video. And from what I've seen is he's not actually overtly, told anyone to buy anything. But he does present a very rosy picture on almost every stock. Every stock he talks about, he always just presents it like a story. And he has like kind of a soothing voice. Let's be honest. He has a soothing voice, kind of like a soft voice, very soft spoken voice. Something that's very easy to listen to. And he kind of like tells every stock like a story. It kind of makes sense why his channel has grown so much. It's like listening to a story every time. You almost can't help it. I know better, but like listening to a stock, for example, it almost like makes me feel like, oh, I'm all of a sudden a little bit more bullish on this stock. But of course, the analytical side of my brain's like, no. Emotional side of the brain, smack that down. So he's very good at driving up emotions. He's good sales pitcher for stocks. He actually should go work for ARK Invest, which the ARK Invest reaction video is actually dropping tomorrow morning, just so everyone knows. I have a little bit of thoughts to say about that. That video will definitely ensure that I never get hired by ARK Invest ever. But yeah, I'm not like that rude or anything like that. It's just like I'm also like not that crazy, like, aggressive against them. So I'm excited for Joseph Carlson, but yeah, me too. I mean, it's a long time in the making. I promised you Julius Caesar like a long time ago, and I just haven't gotten to it. Joseph Carlson, the story, yeah, he's all about stories. That's basically the context there. Exactly what Carlson was talking about, because he is a fraud. Oh shit, my opinion, Joseph Carlson just took a 180. No, I think he's the greatest investor ever. Yeah. So like, yeah, I mean, we've been talking about this on the channel for quite some time. Anyone who uses price to sales metrics solely, even EV to sales, I did not even know he did that. I didn't even see that. I didn't even know he did that. I know he does price to sales measures, but not EV to sales. Wow. Well, That's absolutely crazy. Personally, I don't like Target. Boom. There's my bear thesis. Excellent. I mean, the bull thesis. My wife loves Target. There, done. No, I'm kidding. No, but I think there's a huge cult-like following for Target. Not so much for Walmart. However, I kind of stand by that. I retract that statement because I've been talking to Strongman, or when we talked about Walmart, Strongman and I, he does seem like he really loves Walmart. And then I noticed that there's a lot of people. I don't love any store, so I don't understand. I don't love any store. I have no loyalty to any store. Well, actually, no, I have a loyalty somewhat to like Amazon. Amazon's so freaking convenient to me. It's just like orders, resend anything I want, super easy. I spend a lot of money on Amazon. Let's just say that. But and my wife spends a lot of our money on Target. So he actually shows his Amazon DCF analysis in his second channel, the one video where Netflix dropped after Ackman sold. Okay, so I'm gonna look at that. And then we have another one. Joseph, you guys are giving me a lot of details here. This is good. Joseph commented back on one of my comments I made defending his picks and valuations. After seeing them, he is insanely aggressive on assumptions when he responds to my criticisms. Yeah. Well, that's a lot what he does. I love the earnings videos, by the way. I can't wait till you do a company I own. I will do only the ones where I actually go out of my way to listen to the earnings report. I've just made it as a policy. If I'm going to listen to the earnings report, I might as well just put a camera in front of me, which is what I'll do. And I'll just listen to it and I'll just talk out loud. And that's basically what I'll do. And then towards the end, I'll just give my thoughts. And then that will be the video. That's what I've been doing, by the way. That's basically what I've been doing. And the first one was an experiment. It went well. You guys seem to really like those videos. I enjoy those videos because I get to kind of kill two birds with one stone, provide content, and listen to an earnings call. That's awesome. For me, that's awesome. All right. So I'm going to enjoy doing those. 30 to 40p for companies are fine. Yeah. You see, like that doesn't make any sense. All right. That doesn't make any sense. Because it depends on so much more than that. I'm feeling a burn in VT since I believe the world won't explode in the coming decades, won't sell. But that's the point. You're not supposed to sell. You're supposed to dollar cost average. That's it. Don't even care. You should just watch. If you're an index investor, solely index investor, you better just be watching YouTube just for fun. All right. You just watch this just for fun because you're just like insane about the markets and you like to watch stock stuff and have conversations with people, and then that's about it. But otherwise, you have to think about it yourself. What is the responsible amount of money you should be investing in individual stocks? Everyone's going to have a different answer to that. I don't care because I don't manage anyone's money. So I don't want to manage your money. If you ever think that I'm going to do that in the future, forget it. I'll provide the links. Oh, yes. Provide in the Discord. That's awesome. That's where I'll actually take him up. He just takes in random interviews with Bezos and intellectually. Yeah. So more. Yeah. I've been watching a lot of his content, and yeah, he does that a lot. He reads a lot of articles, basically. This is becoming a Carlson roast fest. This is what this live stream is turning into. Frustrating about Carlson is that he could have been a great finance YouTuber, but he took the kindergarten approach, repeats the very basics in every video. Yeah. But I mean, maybe he hasn't learned it, and that's probably why. I could see. Oh yeah. Oh wow. I'm just catching up. Okay, so let's actually see. ESG is yeah. Yes, I would probably agree with this, but I won't. Okay, so isn't the guy? I don't know. It's a bit uncomfortable. Wait, who is? Chris, I don't know. Wait, who are you talking about? Torre, who are you talking about? I don't know who you're talking about. Efficient market theory thoughts. I'm trying not to skip over anyone's, but it brought me down and I kind of lost my path. Okay, so efficient market theory. The thing is, I do have a problem with efficient market theory. It basically assumes that all things are known and priced into the market. I don't think so. If anything, then you might be saying that the information is just wrong then. Because, I'll say this. Thoughts, a preventive understanding by individuals are actually priced in the market at any given time. For example, oil, it was priced in that, let's say for the United States politics, because I hate bringing like politics into anything, but only for the purpose of investment will I ever bring it in. People have had this understanding that, if Joe Biden had won the White House, it would be bad for oil. And so, it was pricing in that a Joe Biden victory. Then just soon after the fact, it was actually quite the opposite. Kind of people then started to realize they didn't even see the full extent of the picture into the future, but it was actually one of the best buys you could have done at that present moment. You actually take a look at any of the large oil companies, you see right after the election is when you should have already been buying. You should have been buying as soon as Biden had won the election. But so the prevailing theory was that, but in reality was something else. Another one was Unum. Unum was priced as if, COVID-19 was like basically not the Spanish flu, but it was priced as if I think they were projecting out like a 5% death rate, 2 to 5% death rate around there. And then so I made controversial preventive bet financially that the Unum wasn't going to suffer that much from COVID-19 and they were going to get through it just fine. And they got through it just fine. And now they're doing great. Okay. And now I'm kind of realizing the benefits. I actually want to take a look at Unum's price today because I did release a video of me actually selling a call position because I always get questions to please release videos about call options. I don't condone options, but I'm showing the call option strategy where you sell call options. So selling call options is a whole different ball game because you can put yourself into a situation that is technically a win-win. You do want to be careful though with the opportunity cost associated with it, because if you're necessarily, let's say, incorrect, you might trap yourself in those shares. So I don't do long extended, I do short duration call options. So I sold some call options on Unum. I talked about in the video. By the way, I also don't expect those videos to, get many views. I actually on purpose literally put in the title clickbait. Like I try not to draw too much attention to them on purpose almost. And then I make the thumbnail ridiculous with a printer and tenders, chicken tenders. So newer people to the channel, they if I'm trying to get newer viewers, they're not going to click on that because that looks ridiculous and on purpose. And then people who know the channel and have been requesting for that, they're going to click on that video and then they're going to enjoy that content. That's why I do it that way. And you've noticed that if you take a look at the original call option video, it's the same exact strategy. I make the thumbnail ridiculous, make the title ridiculous. Basically, newer people are not going to click on that because they need context. So it's almost like I would prefer them to watch other videos first. And then from that context, then they can watch something like that, where it's kind of talking a little bit more advanced strategy. But, that's neither here or there. Just a little bit comment there. Okay, so I'm seeing this. I'm gonna actually pull up, by the way, I'm gonna pull up the YouTube index because before I continue with questions. Yeah, I'm having a fantastic day with regards to the recent sell-offs. I mean, I'm very excited because I can actually, sorry, I'm hiccuping there, actually add to positions, which is awesome. All right, so let me bring you guys back. So yeah, the YouTube index is now down. It's down decently, actually, 16.39% and 15.93%. We have SoFi. SoFi is up. We're up on SoFi, so we're making tons of money. Let me remove that. Yeah, I'd agree with Chris. See, I don't say he's a fraud. His heart's in I wouldn't say his heart's in the wrong place. He's not doing what other people are doing. Okay, so yeah, Joseph Carlson is just you see, I agree with you guys. He's more his voice is soothing. Yeah, that's why his voice is soothing. It's called the Story Fund. Yes, it's called the Story Fund. Good for drop shipping on Shopify, bro. Yeah, he's spoken about him, but he's never live on his channel. Who are we talking about? Who are we talking about? You probably yeah, I don't know who we're talking about. Who's the literal yeah, I don't know who we're talking about. I would love to know who we're talking about because I don't know this context. I don't even know the context for strongmans. I don't even notice that. Julius Caesar, it's funny, but Mormons like this shit. Jeremy, we did not sell WA. Good vibes. Yeah, he is probably sad. Bobby, he has an Amazon playlist, Fabio. Do you want me to send you videos on Discord? I mean, more the better. That gives me more research so I can release the video as a full level-headed reaction. But yes. You're talking about, okay. It brought me all the way down and I kind of got spoiled. So I saw your comment, Tori. I'll get to it in a second. So I'll talk about why I do that. So who is the best investor-centric YouTube channel in your opinion? Top three. Ooh, top three. Okay. I would say Joseph Carlson is good, pretty good. I think he gives a very level-headed, calm response. I disagree with him on a lot of things, by the way, but I always believe that there's room. And I'm basically saying, I'm extrapolating from your question, YouTube channels that focus on individual stocks. Because if I go on YouTube channels that talk about best investment approaches traditional for retail investors, I'm going to actually say the people who I go obviously on live streams with, like Strongman Personal Finance, Jay Nagy, index investing with Cole, they're providing a lot of content related to how index investors should approach things. And that's a different strategy. If we're talking about individualized investors or individual stock picker investors who are talking only about evaluating companies, and that's all they speak about, that's the criteria, I'd say Joseph Carlson for sure. Oh, my mind's on Joseph Carlson. No, Sven Carlin. I apologize. Sven Carlin. Immediately when I said that, like everyone's like, oh, I'm off. All right. But no, in all seriousness, not Joseph Carlson. I apologize for that. And seriously, Sven Carlin. A number two would be that I've seen, and this is like the thing. This is like I have to like come across them. Jeremy Financial. No, I'm kidding. Just joking. Had to do it. I had to do it. Oh, Investing Sucks. Investing Sucks. Eric. And Investing Sucks. He's actually pretty good. Longer videos, takes a little more time in the analysis. And another individual stock analysis guy. Maybe like who's that? The Australian kid, Hamish Hodder, something like that. But maybe. All right. So sorry if you went over this. Why did you get back into banks? Thought you said loans, liquidity. Yes. No. It is. So basically, I'm just building up the position. That's why I think you guys are slowly getting used to my style, but that's my style. So I'll build a position. I don't like just buy it and say like, oh, that's the bottom. No. That's not what I'm saying. So when I buy Bank of America back, first of all, I'm buying it at a lower price. So I feel pretty proud of myself because I'm buying back at a lower price. But it's my favorite bank. So I personally believe that is the bank that I want to represent my financial exposure, my exposure to the finance sector. And so I have decided that it has fallen enough for me to say, okay, now I'm willing to allocate a portion to that position, full well in the belief that I will have greater opportunities to allocate more and more to that position and actually build up the position, because that's a core holding. You see the designation, and I'll actually pull that up here. Let me zoom in because this is ridiculous. I can see it now that it's zoomed out like crazy. Okay, that's a little too zoomed in. Let's go with 150%. All right, so Bank of America. Oh, that formatting is weird, but whatever. Bank of America is, so it's only 0.97% of the portfolio, and it's going to grow. It's designated as a core holding, and it's set to accumulate. But yes, that's basically my answer to that. But yeah, back to the YouTube index, because this is the most important thing. Can you do more earnings videos on companies that you are decent prices currently? As much as I love to watch stupid stocks burn, it's better to get your commentary on stocks I might actually buy. Yes, I was doing the one on Voyager in particular. If you guys check that video out, it's a good lesson on the toxicity of assets, on the dangers of certain assets that you want to be very careful of, and why sometimes you have to go far deeper into the company to really understand what it is that they're doing. And I mean, on a preliminary thought, you might think, well, 9% interest seems rather high. How are they doing that? That seems pretty sketchy. Your instinct would be correct, because as we went in through the video, you saw the instruments that they're doing, what they're lending out to. If you take a look at their counterparties that they're dealing with, and they're lending out at very high interest rates, well, that presents what we call that counterparty risk. And counterparty risk is very dangerous. Okay, so I'm getting to your comment finally, toward the pot. Okay, so the reason why I actually allow pretty much, I guess you could say, everyone is I won't allow comments necessarily that are spammy. I will remove those comments. I remove Google will remove comments actually automatically with a link. So by the way, if you know that if you try to post a link in comment sections on my channel, Google will automatically delete your comment. And that's Google's feature, not mine. And that's to try to prevent these spam bots. But you can see the spam bots are absolutely horrendous. I just don't make Google even stricter. Google gives you an option to be even stricter. I don't. I'll just go through there and I'll try to the best of my ability to remove the spam as much as I can. But regarding, let's say you said this individual is a questionable beliefs, all right, or horrendous beliefs. Let's just say that. And I'll say that he's not really necessarily a part of the community, more like a critic. And it's kind of a policy that I have in Capital Mindset to allow any and all critics to kind of say their thoughts, because I have the thickest skin ever. I mean, I hope you guys know that by now. I have the thickest skin ever. I do not tolerate insults towards my subscribers. So if someone directs an insult towards another subscriber, I won't really tolerate that. But insults towards me or things towards me, which so far this individual has only directed them towards me on this channel, so I can only, address them for this channel. It's completely fine. So they're completely open to just saying whatever it is they want. I don't really care. Doesn't matter. But yeah, I'm seeing now a bunch of people responding that it was BP. Yes, I understand. I wouldn't even say he's necessarily part of the strongman community at all. He's part of the other community, right? So yeah, so he's part of Mike's community, not really the Capital Mindset. He's part of these other communities to always promote that individual, who shall not be named. But yeah, all right. So Fabio's advice: getting a YouTube channel going. Started posting 3 weeks ago, but looking for more ideas to grow. Thanks. I mean, okay, so the thing is, at least for me, there's always new things to talk about. I don't know, what are you making videos on finance, particular on these topics? Because if you are, there's always new things to talk about. If you're talking about your hobby, you always have to try to find new things to talk about. But sometimes it's not so much about the quantity; it's more also about the quality. I actually at some point might have to reduce the content amount and kind of do longer concentrated videos. And that might actually have to be how I do things at some point in the future. But the thing is, it's always like, okay, I want to talk about this. Oh, this just happened. I want to talk about that. Oh, this just happened. I want to talk about that. And I'm also kind of at the same time running updated analysis on all these stocks with a growing list of requests. So that's why there's always things for me to talk about. So I know it doesn't really answer that question a lot, but I elaborate on the question, I can answer more. Torres Spot thought you were talking about yeah, okay. BP. Fabio was talking about BP. Yep, I'm just catching up, guys. Just catching up because I try to not skip over anyone's questions or comments. Try to address everyone. I'm pretty sure Fabio, he is the guy himself. I want to see what he says. The guy, forgetting the big difference between Joseph Carlson of the world and Tom Nash of the world. Joseph has never claimed. Yeah, I'd agree with that. The guy has his opinions, makes video. Okay, so you guys are talking about Joseph Carlson there. Benjamin as a finance YouTuber. Who's Benjamin? I don't know Benjamin. Hey, who's Benjamin? I'll look him up. Who the heck is Benjamin? Benjamin. Stocks? Is this stocks? Oh yeah, investing brackets. That makes me sad. He's got a lot of subs. He doesn't need a shout out. He's got tons of subs. This guy's got 312,000 subs, right? So I'm just checking through a lot of more awful TikTok trading strategies. Okay, so no, he's got some criticism of TikTok investing strategies. Oh, it's him. Okay, I know. What's his name? Diamond Kitty or whatever. Yeah. No, he's good. I mean, he deserves every penny he got from that. All right. I think he's trying to do good. Benjamin makes me smile. Yeah. Chill with Cat. Yeah. His Buller is fun to listen to. Sven Carlin is great. Capital Mindset is the bestest. Hey, thank you. Yeah, but Benjamin, I like Benjamin, but I didn't know he had a YouTube channel still going on. I thought he retired or something. But no, good on him. He deserves every penny. All right. Screen is blurry. Yeah, I'm gonna stop sharing my screen because this StreamYard service doesn't do as good of a job on that front. I think it's because they want my money. So then they want my money to make the stream better. Okay. That's why I use another software that's much better, but it doesn't let me highlight comments. So I have to make like a sacrifice in that sense. Or I do like a combination of the two. Okay, so let's see here. Do you think BHP? Okay. Well, actually, no, they came down, right? They actually came down. So I did a video where I was selling BHP and ConocoPhillips. So yeah, BHP is now nowhere near where it was in terms of size. But neither is ConocoPhillips because I sold them around the same time. And then Rio Tinto is still in there, just like not doing it. Actually, Rio Tinto is down. So Rio Tinto, or I think I also trimmed Rio Tinto because it wasn't before 0.31%. It just was so insignificant before compared to BHP, so didn't really feel it. But yeah, I trimmed them down already because I thought the market at the time was pretty overbearingly bullish on these companies. Maybe now I'd have to reevaluate their prospects, and maybe now that they're not that much, but I'll have to see. I can't really comment on it. Oh, you can see that Thor Industries is getting absolutely thrashed. So I did good on like lowering the allocation because I went insane and I allocated way too much too quickly, and then I was telling you guys that was stupid, but I wasn't doing anything about it. So I was kind of like not making any sense. But yeah. No. Now I know who Benjamin is. So I know who Benjamin is. But yes, no, I like him. So Cisco, thoughts on Cisco. So Cisco, they reported earnings today, and what surprised investors was the fact that they're going to actually report declining sales going forward. And that's a little bit of a scare to people because they weren't expecting that. And that has a whole host of implications, right? So we have to think about, well, B2B, they're a B2B company. They're going to focus on B2B. And hold on, I'm having a little bit of a brain fart because I'm pulling something up for us later because I'm going to bring this up. Oh, yeah, I'm going to bring this up. And yeah, so Cisco, they actually beat on earnings expectations, but if we're going to enter kind of a slowdown, something like Cisco might actually get affected. And they're in a industry that's very competitive. Cybersecurity is something they compete in. They compete in a whole host of businesses, but the fact that Cisco, I think Cisco's been buying back a ton of shares, and I'm going to confirm that because if they've been buying back a ton of shares, they're going to head on the list of the wasteful buybacks. Let me see, Cisco Systems. All right, so let me actually pull them up over here. All right, cool. I'm just going to check for their buybacks real quick, and I'll be right back to commenting on it because I just want to check. Yeah, so they have been doing buybacks, and yeah, so I wouldn't call it like super wasteful buybacks, to be honest, but like not like the best use of buybacks. But yeah, I'd have to do a video on them and actually like look into them. Trying to catch up to where I was. It keeps sending me all the way down, and then I have to come back up so I don't skip over anyone. Oh, here's a comment. Capital Mindset, on your AMD video, you explained to me that the comments that you used cash flow. I think they're destroyed this quarter as Xilinx was only accretive 6 months. Yeah, so what I did was I just accounted for it in greater growth potential. So then I just like basically up the growth potential on AMD. That's how I kind of accounted for that. Because I did see that, and I addressed briefly that was the case, for example, in like the forward estimates being higher, because that would assume that. So then I basically just assumed the growth rates were a little bit higher. My opinion is a bit bearish, it might seem, but it's more of a caution. It's more of a caution and than anything. And I'm in like no rush to add a semiconductor play at the moment. So I would have to demand more kind of, well, what is AMD at right now, actually? Has it been moving up or down? Because I have to check. Oh, and I'll address that, Michael. That's a good question. Inflation. Okay, so it's at 96. So it's down 6% today and then down 2% after hours. And then at the time of the video, I think it was like $80. So it actually went up because they had fantastic earnings or whatever. And then a bunch of news came out. But I think my point on AMD is just an abundance of caution because I'm in no rush. So for me, for me to move the needle on where I want, I'm going to have a little bit more demands as far as a margin of safety for something like advanced micro devices. And I already explained my opinions. I prefer, if you ask me, put a gun in my head, Intel or AMD, I would take AMD as a company. And yeah, I think I'm more bullish on the prospects of AMD. I'm team red, despite having team blue products right now. You're utilizing team blue products. It's a little bit there. 6 weeks. Okay, so okay. You meant 6 weeks, not 6 months. Okay. I am thinking about adding VZ. Your thoughts? Are they raising their prices and being an oligopoly? They can get away with it as people will cut many things, but not internet connection. Well, like I was saying earlier, my issues with Verizon is that Verizon is a company that relies on debt issuance to kind of constantly maintain its network, and in a rising rate environment, not necessarily good. And yes, while they are an oligopoly, yes, while they are competing with the likes of AT&T, T-Mobile, they can't really do it. There's a limit because they're an oligopoly to an extent. They're not going to, the other ones aren't going to just allow Verizon to just raise prices willy-nilly without them saying we're going to take market share. But then simultaneously, Verizon actually, I think, has been allocating capital the best among the two, being AT&T and Verizon, because AT&T has been doing all the shareholder destruction rules in the book that you can possibly follow. They acquired Warner Bros. Discovery for a ridiculous amount relative to what it was probably valued. They destroyed a lot of the value and subsequently destroyed a lot of the value at AT&T. And so when you're dealing with these kinds of businesses in a rising rate environment, in a liquidity crunch, these aren't things I'd be really interested for me in buying. So people buying for like a bond proxy, I'd rather just buy the bonds than the actual stock. But yeah, I'd say, my opinion on Verizon is I don't like it. You can kind of tell I don't like it. I think that if someone is an income oriented investor, they can find other places to park their money that will probably be safer. Okay. Safer in terms of the longevity perspective. Because even something like let's say tomorrow there's a technology that kind of comes out that is making Verizon's internet connectivity useless. Let's play around with this idea, hypothetically speaking. How is Verizon in a position to kind of expand on that when they have so much debt already from their current infrastructure? Can they accumulate more debt to build out that new infrastructure? Maybe not. It's kind of like a gamble at that point. So then there are other companies that are very well capitalized that are trying to figure out better and better ways to provide internet to the masses because they benefit from it. Is speaking the internet giants, right? Basically, they're trying to do it. And then you have competitors, not competitors, but future competitors. You can think of like Starlink, stuff like that. That all those are just question marks. And I think I talked about this. There was one of my last projects at which was the capstone project for us was at university was for Verizon, and that was one of the issues we actually came up and addressed them to Verizon, and we actually got to speak to the Verizon team on that, and that was basically the concerns we had, or we cited to them, and which was I think are still valid, right? And so yeah. High inflation, good for Warner Bros. Discovery debt. I love questions like this one because this is the prevailing conventional wisdom, is that inflation is good for those who hold debt. Yes, depends. But I think for Warner Bros. Discovery, more so, yes. You see, like I just said, for Verizon, not so much. For Warner Bros. Discovery, yes. For Verizon, not so much. Why? Because Verizon is extremely capital intensive and will require the continuation of accumulation of debt. So debt at higher and higher rates, and inflation may not be able to raise prices in the same effect as other things would be. Something like Warner Bros. Discovery might have a little bit more pricing power, and the economics of content can be a little bit better. However, right now at the present moment, the streaming sector is spending a ton of money on content relative to the value it's producing. And then you go, depending on streaming service to streaming service, it varies. But yes. Recession, we are to expect deflationary regime next or more of a stagflation given the supply chain constraints and uncertain macro environment. I'd say it's not out of the question. So a deflationary environment, like if we enter a severe recession, we might see deflation. Okay. So because like that would bring down aggregate demand tremendously. So aggregate demand would let's say, and hypothetically in this instance, would collapse. And then supply remains relatively normal, or maybe goes up a little bit, or maybe comes down a little bit. Let's just focus on aggregate demand to the theory. So all else being equal in this assumption, aggregate demand coming down, I would expect then aggregate prices to kind of come down as well with that. And that's the theory behind that. So yeah, I would tend to agree with that if we see a strong recession. Okay. But stagflation, I wouldn't say, because like the thing is, we're not money printing. And I think that's something that everyone should get from my channel, at least, or any channel that says this. We're not money printing. The United States doesn't print money. Fiscal policy can be inflationary because the government does borrow that money and then spends it and might direct it in a particular area. And then it can cause inflation because it's misallocating capital. That could be the case. But the actual instance of QE isn't necessarily money printing in and of itself. QE is just an asset swap that occurs with the banks. And people associate QE with money printing, but it's not money printing. Fiscal policy can be very inflationary. So let me separate the two. That's why I always say in every QE video, I say, please, when I discuss QE, please cut it off and separate it to the side, because we can discuss fiscal policy being inflationary. I was just focusing only on QE not being necessarily inflationary. The United States operates on a debt-based system. The US government still borrows the money. It doesn't print the money. So technically, it doesn't print the money. And so Venezuela, they actually printed the money. All right. So you'll see hyperinflation in an instance like that. You won't see hyperinflation like that in the United States. A lot of the inflation can be attributed to fiscal spending in crazy areas. You could say that was the child tax credits, the stimulus spending, all that. That's true. I believe that. But then, conversely, at the same time, what is also true is we also had a lot of supply chain issues that we can't underestimate. And those, remember that countries sometimes take their consequences of their actions sometimes take several years. And so the shutdowns for the pandemic, because it wasn't the pandemic per se that caused this, it was the shutdowns in response to the pandemic that caused this. These effects are still being seen today. And like, look at China right now. What's causing the supply not to return in full effect? China's lockdowns. I think everyone's kind of in agreement on that, but it's the lockdowns, right? So that's preventing a tremendous amount of flow of supply from China that otherwise would be. And we've been discussing that on Discord on and off, because there's a whole host of problems with terms of supply, and you can profit from this, right? There's some trades that you can make profit from this, particularly in the shipping sector, but not all shipping, but some. Okay, so thoughts on Stellantis. I haven't seen Stellantis, so I don't even know Stellantis. Stellantis, what is this? Automotive manufacturing from 21 basis, border 50/50. Oh, okay, so Fiat Chrysler. Oh, this is the French PSA group, right? Yeah, Amsterdam. I'd have to take a look at it, but it's actually a big company. So I think this has one of the best. I think one of their brands is one of the best selling electric cars. I don't remember. No, it's not them. No, it's Peugeot, Chrysler, Citroen, Dodge, Opel. Okay, so those are their brands. Maserati. Okay, so yeah, I'd have to take a look at them individually. I don't really have an opinion on them, but being a auto manufacturer, it is a difficult business, and that's the problem with Tesla. All right. What are your thoughts on gold as a store value? Where do you think it will go given the current macro cycle? Gold. You got to be honest. Like, you're not going to get rich off gold. You're not going to get rich off gold. Store value over a very long period of time, maybe. I don't know. I collect gold for fun. That's what I do. So I collect like some gold coins here and there, and just for fun. But that's like a side hobby. It's not. I don't really consider it necessarily like an investment. I'm not like a crazy stacker. I'm not collecting like hundreds of thousands of dollars in gold at a time. But I do like to. It's a collection that was started back in some of my older family members that I am now then continuing. So yes, regarding AMD last quarter, other operating loss was 886 million due to the amortization of intangible assets and acquisition of related costs. Gap is interesting sometimes. Yeah, well, gap is because like it's supposed to reflect the value loss when you write something down. So when you amortize something, it is supposed to be like reflecting the wear and tear of that thing. So even though it's not like necessarily a cash expense, it does reflect that to some degree the value of that asset has gone down, like depreciation and amortization, or depreciation particularly for real estate. You're depreciating it not because it's free money that you're depreciating, it's because the property is degrading over time as time passes on. So that's what the accounting is trying to reflect. And that's, yeah, but I kind of agree. A lot of people that share that same opinion. Do you think JP Morgan is a good buy to get into? Well, they're known as a bellwether in terms of in the banking sector. I prefer Bank of America as a company over JP Morgan, but JP Morgan is considered to be the higher quality. So you might make the argument to go with them instead. That's a fair argument. Now, JP Morgan, the thing is, they have a massive investment bank division. And you think of them in Goldman Sachs, I'd take JP Morgan all day, every day. They also have a massive commercial side. They have a massive retail side. So they're just a massive bank, massive credit card division. So they're a massive bank. They're in everything. And so they're also a primary dealer. They have that going for them. So they have a lot of power. They're a bank of countries at that point. So I'd say that if you're looking to get into Bank of America or looking to get into any bank, it's not the worst one you could have chosen. And it's one that if I was buying JP Morgan Chase, it'd be one that maybe I could consider as a buy and hold forever. I hate that term, but because some things can change, but I'd have to really take a look at it. My preference is a Bank of America, and Warren Buffett's is as well. Not saying that makes me right, but yeah. Where possible, is it finding your portfolio? Is it possible to see what companies you're invested in? Oh yeah. Every single video that has the title portfolio update, you can, and I think there's going to be one posted this week. I'm going to probably try to post one this week. And then in there, you're going to have the new, not the new link, because the link doesn't change, but the link will be there again. So every single video that you see that has portfolio update has the link in it. And yeah. Also, if you're on the Discord, you can probably just ask anyone, and then someone will just give you the link to the Discord. Sorry, not the Discord, the portfolio. Your friend Buffett is long MKL. Yes, I know he bought MKL, which is funny because MKL is one of their largest holdings is Berkshire Hathaway. So it's like they're just buying each other. But no, it's Buffett's been buying heavily into insurance companies. What did I tell everyone? Rising rate environment. What do you want to own? And banks, particularly, he was buying Citigroup because Citigroup's heavily distressed. So if it's really distressed. So if you think this city is going to kind of re-rate itself and they're going to fix their problems, like how I say that I think they might, and again, they're the speculative bank I have, it's going to turn out well. That one's going to do well as well. And I think he sees that. All right. Oh my gosh, it just jumps down for some reason. Non-GAAP was 1.8 primarily due to high gross profit. If cash flow converges, they can do 8 bill this year. I might be too positive. Well, I think what was the compounded growth that I did assume? Let me actually kind of go back to my video, and I always just do capital mindset AMD. And then I can see my newest video, and then I can see what the heck did I say? All right, yeah, I mean, on my high end scenario, dude, I mean, I assume 37% compounded growth, which is I think that's really high, really high, compounded for 10 years. So again, I was doing that to assume this recovery period, and so that's why I went with that very aggressive scenario 5. And I think, let me see it, because I think scenario 4 was still pretty aggressive. Scenario 4 was 30%, which is still pretty aggressive. But it's just the margin of safety I kind of required from it. That's all. But prefer that business over Intel. And by the way, it might be that the market might say that AMD has so many tailwinds, and when it's something obvious in the market, oh, this is a perfect. No, you know what, Tori, I love that we're bringing this up because this is actually a perfect case study, and I love finding case studies. All right, so this is the perfect case study. You can see I'm excited. So, for example, take a look at a company like ASML. We have to share the screen because that's what this moment is for. This is a sharing the screen moment. All right, so let's take a look at ASML. So this is a stock that, and we're going to not look at the more recent times, but throughout its entirety around this time period, it's been always priced to perfection. And oh, no, I got a better one for you because this is still priced like crazy. Well, ASML still priced like crazy, but this one, Visa. All right, Visa. Everyone is aware of Visa's importance. Everyone is aware of Visa's quality. What does it get in return for that? It gets a very hefty premium. It has traded at a premium for as long as I've been investing. It has always been at a premium. I think at the very beginning of its of trading, maybe around there wasn't as much of a premium. I think maybe it was more or less. I forget, but regardless, Visa's always been at a premium. Why? Look at the margins, right? It is literally part of it's so integral to the financial system. All right. Same with MasterCard. Okay. So this is a good example why, my price points might never come to fruition, and you can buy it and it could grow. And then the market just perpetually keeps it at a high multiple because the market identifies it as this amazing high quality asset that everyone wants to be a part of. That can work out. So that's why I love that we're talking about this and brought it up and gave me the idea to actually bring this up, because this is a topic I wanted to address at some point. So there are some stocks. Now the risk is that at some point in this future, this is a risk for Visa, there is some level of disruption or in some reason why the market says you're not worth that multiple anymore. All right. And so might not then pan out. So like if I bought Visa here, the assumption is they can kind of maintain these high multiples, which on average, let's say the lowest I've seen Visa ever was like close to a 20-ish multiple. They've gone, I've seen like right here. Well, I won't trust that one. 37.75 is what it says right there right now. And let me zoom in for you guys, because I just realized it's zoomed out kind of. And let me make it white. So you can see it on the right-hand side. The PE says 37.75. And yeah, if we take a look at, again, the max, again, basically been a really good performer over this time period. But regardless, the market might say AMD is such a fantastic business. The tailwinds are so obvious, right? Going back to kind of like that efficient market theory, that it's not complete BS, because remember, it could be wrong in its beliefs, but it's basically the market will price in what the market believes. Let's say the market believes that, and it's going to price AMD richly. Let's say it does that, and it could price it richly for 10 whole years, and AMD could continue to grow. And then let's say the market maintains it at that multiple. That would be similar to a story like Visa. That could happen, but it's not saying that like that's still my buy price. That's still the price I would participate in. And I've flirted with AMD in the past. I used to hold AMD, but not at these prices. So I think hopefully that makes sense. But I'm so glad that we brought that up, because it actually spurred the idea in my head to talk about this. Okay, so trying to get down. Do you think GPM? Are you? Oh, I got a super chat. All right. I'll do it for you, because you did super chat. There you go. There's my roo. All right. So, are you looking to add to your MKL position? I'm always looking at my MKL position. That is a buy and hold forever for me. I don't like that word, but it is one. Okay. So, yeah, for me. So, yes, the answer is yes. Every single time I get the chance, when I'm not too busy buying other things, and I see like MKL is at a reasonable position, which, let me remind myself, what is MKL at today? I'll just look at my portfolio. It's easier to do that because it's already up here. MKL. Okay, so it's at 1,300. Yeah, I mean, I'd nibble here. I'd buy a share or two. But yeah, I'd nibble. I think that's fine. But yes, I hope that answers your question. Thank you, Andy, for the super chat. All right, so I'm still going to comment, trying to see everyone's question. I'm not trying to skip anyone. More comments about. Are you talking about? I don't know if I used that terminology, but I mean, the thing with, I don't have any I bonds right now, but I see the point for them. I do see the point for them, because yeah, I do see the point for I bonds, because I mean, it might be a good moment to actually maybe consider some I bonds at these rates. I might consider them. All right, I'll tell you that. I might consider them. Okay, so you made me think. You see, that question made me think. When I was like, oh, okay. Good morning. Oh, and I trust me, I'm going to be talking about this. I should have made the video before, because it's easier to poo-poo on someone when they're down. But I wanted to make it. This a long time in the making. I made other ones. So everyone, I just want to comment. Relevant now. Joseph Carlson EV sales thing is hilarious. JP. I mean, I saw that the first time. I was like, what the heck? Lufufu is shorting Stark and buying Tark. Just completely over leveraging himself to the other direction. Manulife. Any thoughts on Manulife? It dropped after earnings recently and is an insurance company. But what are they insuring? So if I look at Manulife, so MFC, I think Manulife, they're like life insurance. Well, they're not like that down, but okay, no, they did a little drop. Yeah, they did do a little drop. Here we go. So I had to zoom out a little bit. So yeah, they're down about 17%. So let me remind myself, what are these guys? Canadian multinational insurance company and financial services. Cool. First of all, it being Canadian, got to take a look at what's on their balance sheet. Different financial system, different maybe bonds. Maybe they're not exposed to that level of bonds. The company operates in Canada, Asia, Manulife. Asset management. They're in asset management. Okay, so they have nearly $1 trillion. This is a big boy. Yeah, it's a $34 billion company. Manulife, large insurance company in Canada. I have to see what's on their balance sheet because it could be what they're holding. Okay, if they're holding like real estate assets, you know what I mean. You know what I mean. So yeah, I'd have to take a look at what it is that they hold in their portfolio. Could be bad stuff. It's not where it was before. I would be. You see, I'm like hesitant to answer that question, like because it's like technically like could be construed as financial advice, but it's not what it once was. It's not what it once was. But it is a good case study to bring up here and there because Unum was a bet against the lethality of the pandemic. So, and its effects on the business. To leave Unum thoughts on cybersecurity stocks: Palo Alto, CrowdStrike, Cloudflare. I mean, all high flying stocks. I think all of them are pretty much overvalued. Last time I checked. So like if I check out Palo Alto, what is it sitting at? Yeah, it's still sitting at these high rates, man. It's pretty ridiculous. All these cybersecurity stocks are absolutely ridiculously overvalued right now. I'd wait, and your patience will probably be better suited, in my opinion. All of our patients, I would be loving to go in there, but that's my opinion. Just you might choose to invest in it, but my opinion is that LMAO. I thought I know you mentioned you weren't adding Goog at these levels. Thoughts on nibbling here to start initial? Yeah, I mean, okay. So like, I always develop a strategy. When I pick a company I want in the portfolio, I do a nibble first. So like Netflix. Netflix is a great example. Netflix, I talked about Netflix when I started to buy Netflix, right? And remember the size it was in the portfolio? It was itty bitty. It's a little tiny. So I just bought a position in Netflix and it was what, like low 300s, mid 300s, around there. And then it crashed, right? And then I was like, heck yeah. Then I brought it up a little bit more, lowered my cost basis. And then more recently, brought it up even more, lowered my cost basis so I can build that position. You can have the understanding that something is not at the right price point, but still kind of build out a position. And Goog, which is the non-voting shares, I like Google. It used to have the GOOGL, had a premium. Now I think it's the opposite, but regardless, I like GOOGL because I get that voting power. But they're both the same regardless. You get the same economic interest. My love for Goog is that they have so many different possibilities. They're a spawner. They're like the pure case of a spawner. And it might be, I have to really take another look at them because it might be that they are relative to most things in the market, relative to the risk profile of the market, they might be undervalued because it's all relative at sometimes. And there's not an absolute level of undervalued or overvalued. Well, yes, there can be, but not necessarily all the time. We don't always have to look at it that particular way. It's not one size fits all. All right. The reason I thought you were bearish was because it implied a scenario 4 and 5 was unlikely. So I assumed your starting point of cash flow was lower. Thanks for the clarity. Yeah. So it could be, also that like the market could just say that it's amazing. Wait, what happened? Wait, I don't know what happened. What happened? I don't know what happened. Did something happen? CVS drops below $90 and might know to position. Yeah, so CVS has that insurance business within it, which I think was kind of cool because they're vertically integrating. Walgreens was selling. They sold their AmerisourceBergen, not all of it, but they sold a decent portion, which is okay, fine. But yeah, is TLT better than options than I bonds? Well, if you're buying I bonds directly, I mean, you own the bonds, so you can hold them to maturity. TLT is you're not going to hold them to maturity because TLT is the the ETF. So TLT is like probably better for like quick liquidity and trading on these. It's like a derivative of these securities because it's derived its value from those securities. So that being said, depends on the goal intended. But TLT is long duration bonds. They're like 20 years plus, I think it's TLT. Let me make sure. TLT. Yeah, TLT 20-year plus treasury bond ETF. So this one's going to benefit the most if interest rates do actually end up declining. So right now, the TLT is down a lot, and I'll share the screen. Share screen. All right, so TLT is, yeah, let's see here. So from the peaks back in 2020, it's down 33%, 31, 33%, around there. And I actually have an interesting article I wrote on LinkedIn, which on LinkedIn, you have the timestamps. So, and I used to actually have some bonds and I sold them and bought stocks, but I have the article still on my LinkedIn and it has screenshots because people can BS these things. But anyway, that's not what we're talking about. So if you think, for example, now, yeah, I'd actually say like, Steven Van Meter has a point here. My only issue with Steven Van Meter when I watched his like content was like, I think he was like, he's got a good grasp of kind of what's kind of going on, but I think his timing was absolutely horrendous. And that was my only main criticism of him. But I think he's really intelligent, or at least he's trying a lot to understand it, and he has a good grasp, I'd say. I don't know. I could be wrong. Just could be wrong. What do you think of EV charger companies? Why would you invest in EV charger companies? Tesla's going to have their own, and they're going to take over the world. So I don't understand why you think other companies are going to be successful in that industry. I'm just kidding, but it depends on which EV charger company we're talking about. I think that EV charger companies, they have a place, but they were crazy overvalued at the time. I think I went over like 2 at the same time, and I think they're on the channel. Actually, it was last year, so it was in 2021 when we were going still through that liquidity boom. But I think they were still showing like canaries in the coal mine. I think it might have been in November that we talked about. It was when Austin was still on the show, and yeah, I think I remember it being overvalued. They do everything. Yes, they do everything. Goog my poog. CVS is good pharmacy business, in my opinion. Yes, and you got to be careful with Amazon. No, I'm just kidding, but yeah, I think CVS is good. I think Michael Burry preferred CVS. Target might go down more. Target's going to start this momentum trade, not trend trade. It might go up tomorrow. It might like bounce up tomorrow, but no, right now it's like people are going to start like panicking. You have Joseph Carlson in this stock. Okay. He's going to say it was a buy at like where was it? Wait, let's do, so if we did an analysis like that, we'd say, okay, so up here, Target is this beautiful company. Everyone is going to go to Target and buy products at Target that gives you a wonderful experience. And then over here, it's like, I don't know, I'm not so sure anymore. And then sells, like that's, I'm not saying he's going to sell, but like, you know what I mean? It's like a lot of retail is going to be like, oh, it's a crazy buy here. Oh, it's down here. Time to get out. Might continue some downtrend. May have missed it. Are you nibbling on Facebook? Absolutely, mystery. I am nibbling on Facebook. Facebook, I'm quite literally just buying almost the same stocks. Not every day, but at least every week. So the only new one is like Bank of America. So like if I pull up the portfolio, the only new one is this guy down here. Eric, you just asked, not you just asked, but I'm glad you asked. I'm about to get into that. Your question at least entered where I can see it very timely. So yeah, I'm actually wanting to add, if you ask me, into Bank of America. Adobe's very similar to like my Netflix strategy, where in fact I might have been a little too aggressive on Adobe, if I'm being honest. But you know what? I'm gonna actually trim this down a little bit because it's fine where it is now. But Adobe's one that I kind of just building out the position. So it's going to be, I'm going to trim it back a little bit because I think a 1% allocation off the bat was a little aggressive. That was a little bit of a mistake on my part. But I do want to add Adobe eventually and make it a core holding, but it's got to get to the right price. And that right price is actually a fair bit lower. So I think 1% was a little bit too aggressive. Should have been a little smarter there. But yeah, Bank of America is following that strategy. Bank of America is a little bit more of a, I'm a little bit more comfortable with the 0.97% allocation, if I'm being honest with myself here. And I like these live streams because it makes me kind of review my own thoughts. And so I go through this and I pull myself kind of like, when you know, when you have a conversation with other people and then you kind of like have an idea and you kind of flesh that idea out a little bit more and you kind of go like, yeah, I made a mistake, or no, I didn't make a mistake. That's kind of what these live streams sometimes do to me. So I like doing them for that reason. And so, yeah, Bank of America, I'm pretty comfortable with that allocation. NCR, no, I'm not going to take profits. I'm actually going to keep it because I did like the company when I did the initial video. And I was saying, like, if this ever came down a lot, and it did, and I was like, oh, heck yeah. So we bought some, and then yeah, we'll keep an eye out on that one. But that one is not designated to a core. Magna International, I wish it would come down more so I could actually finish building out that position. But okay, your question, Bank of America, or banks in general. I like banks. My favorite bank of all is Bank of America. As a customer and as an investor, it's my favorite bank. I have also Citigroup. Citigroup's been in the portfolio. It's the only one that has never left the portfolio. And it went through an up cycle. So we actually take a look at Citigroup. If I was a Chad market timer, I could have just sold when I sold all the other banks and then bought back lower, man. But whatever. I'm still happy because it was the smallest allocation of all the banks. So I think, yeah, it's still only 1.39%. But yeah. So I sold the banks. Where's December? Yeah, like around here. Actually, no, yeah. Oh, yeah, I forgot. Like Citigroup actually went through this like downturn around here where yeah, that's probably contributed to why I didn't sell Citigroup. I'm looking back, I'm like remembering like, yeah, that's probably what caused me to be like, yeah, I'll just hold it for the speculation, bro. Yeah, so it's kind of just stayed. But yeah, Bank of America was one that I exited around the same time. Citigroup is the only one that remained. Bank of America is back and better than ever. And it's going to be a decently sized position that should it be allowed. And that was to answer whose question? I'm trying to find your question. This question. All right. So not to skip over any of those questions. The old buy high, sell low strategy. Classic. Yes, it is. Target was a buy at 300 because has a moat. Yeah. Yeah, that's the idea. Costco could fall a lot. It's overvalued. Yes, I think so. Costco will report earnings next week, so I held off on the video. Again, after this stream ends, the video is going to release. I'm just going to set it to go public. In fact, you know what? Let's see if I'll just set it to go public in like an hour or so. And then that way if I forget, because I'm going to get back to work once I'm done with this. Let me schedule. We shall schedule for today at around, let's do it for 10 p.m. So some of you night owls, you can see it if you want. And then otherwise, you Europeans can see it. So we'll schedule that. All right. So it's scheduled. Beautiful. All right. So that's scheduled to release at 10 p.m. now. Yeah. So in that, I discussed that I'm going to talk about Costco next week because the earnings are next week. So I was going to talk about Costco, but then I was like, nah, it's next week. And yeah, I just saw your new comment come in, but I'll see that. Personally, I don't even see the B2B part of Meta's metaverse, but the legacy business is doing 40 billion. Yeah, no, like that's the point. It's not about, like, most people don't see it right now, and that's all well and good. I think that's the potential. The B2B is the potential. And so something like a Salesforce is what Facebook will target, but that's the potential. You're absolutely right. Like, that's the prospects I like about Meta. I like that Meta has this cash flow machine. Of course, it's not my favorite business. Let me be very clear. My favorite business is Alphabet, but doesn't mean that Meta isn't like a close second. Okay. Or not a close second, but a close third. Because I'd say Amazon's probably my second, but even though Amazon right now has a lower allocation than Facebook or Meta for obvious reasons right now, because I think Amazon's still in the overvalued part. I don't care to say that. I'm not biased. Fabio, if you were to sell a put and get called into buying the shares, is it a taxable event? Be a paper loss, so no profit was taken. Hold on. I got to think about this question. Wait. So Fabio, if you sell a put, but get called into buying it. Wait, I don't understand where the loss is. You didn't lose anything. You still have to pay on that premium. That premium was income. That doesn't count as the position. You would be a paper loss. So yeah, no. Yeah. There's no. Yeah, there's no loss. You have to recognize the loss. There's no loss taken. You had to buy. It was agreement, right? You can't declare that a loss.
That'd be like, buying a house. You have an escrow to buy a house at 300,000 and it goes to like 150,000. And then let's say you buy the house at, let's say 150, 250. Yeah, that'd be extreme. And then you could just declare a $50,000 loss because the price went down. No, you can't do that. Of course, when you sell it, then you can declare the loss, but it's not a loss yet. Is Adobe a recent buy for you? Okay, so Adobe's not a recent buy for me, at least not in last month. I think it was like a month ago or a couple months ago. There's one of the I think it was in the Adobe video where I stated that I would buy it within that time period. And then I think in the last update video, it was already in there. Definitely was already in there because it's been in there for a while now. But it's not like, let me be very clear if I can't be more clear now. It's not a, like I'm not buying aggressively. I kind of just bought one tranche and that's it. And I might actually trim down this tranche, take the tax loss harvest or whatever, very small, but take it and then kind of lower the position because I do still believe there's still more room to come down. But I like the business. I want to have a core allocation to Adobe, just not at these prices. So it's designated core, but only 1.10%. So City might the Karen mode. Yeah, the Karen mode of Target. Yes. Balls deep in Grinder stock. Is Grinder going public like for real? Like actually Grinder IPO? Really? Grinder IPO. Yeah, on a SPAC deal. Oh gosh, another SPAC. Like they're doing so well already. But yeah. I want Costco at 250, but I don't know if that'll happen. Well, if it never happens, it never happens. That's the position. If that's the price that you want an asset at, stick to your principles. That's the price you want it at. I stick to that. So like if I see a stock that I want it at these prices, I won't buy it unless it gets to those prices. Let's take a look at AMD right now. AMD, I love AMD, or I like AMD. I don't love it, but I like AMD a lot. It's not there for me now, but I can appreciate the company, cheer for the company on, love what the company is doing, love how they're, executing on all cylinders. I'm just not participating because the price hasn't hit where I'm at. And then, like also think of it this way. If the price hits where I'm at and I'm entering, I'm confident in the company. I'm not like hoping that I don't think the company is a bad company if I want to buy it. So it's very different from me looking at something like Voyager or Tattooed Chef or any of these other companies where I'm not even interested in buying them. And then I think that they're overvalued versus something like AMD where I acknowledge the quality of the business and I really want to participate in that business. I just want it at the right price. So it's like a very different sentiment. So sometimes people need to separate those two because like when I say to an AMD bull, and I'm not saying anyone's thinking this, or let's say I'm bullish. I'm talking to a bull on a stock and they're bullish on that stock. And I'm like, I really want to buy your stock. I want to buy it at a lower price. Sometimes they're like, oh, you're bearish on my stock. I say, no, I'm bullish on the company. I love the company. I want the company in my portfolio. I just want it at that price. And so like, that's only the thing going on there. But anyways, how much further could OSTK go? Well, I don't know. I remember there were comments on my channel about the videos I made on OSTK saying like, oh, OSTK, I can actually bring down the cost base a little bit because I'm still under that allocation. That, I'm invested in it for the core business. And I said, like I'm invested in it for the other parts of the business. So it's a speculation for me and that's where it's going to remain. And so, turns out it was probably a good idea because I think that video was made when the price was like in the 40s or 50s, somewhere around there. So I think that as speculation, it's serving its purpose. And you see, like, I'm not going to lose any sleep over that if it goes to like zero. I'm going to lose a total of like currently of the stocks, right? I'm going to lose 1.33%, right? So same with like Zillow. Zillow's fine. Zillow, I've been lowering the cost basis on Zillow. Zillow, I still like because Zillow has a lot of potential. Overstock has a lot of potential, but that's what they are right now. You can see the how absolute. Well, I actually had to designate these so you can actually tell which ones are actual speculative investments and which ones are not. And remember, I keep all stocks even when I sell them, so newer subscribers can actually see. So, for example, this one's a fun stock. This one's a fun stock. The actual speculative investments are 1, 2, 3, 4, and 5. I only have 5 speculative investments. So, yeah, but I still, funnily enough, I still hold the non-speculative investments to the same rule, or try to hold to the same rule that the totality can't equal more than 10%. So yeah. Europeans. I wasn't dissing on Europeans. I love Europeans. I go to Europe quite often. So I was just in Spain, actually. Well, Spain and Italy. So yeah. But next time, maybe we'll do like a European meetup one day. But all right, sorry about that. Someone was about to come in the room, so I was like, hold on, live streaming here. We can talk after. All right, so what price are you buying Google? Okay, so Google McDougal. Oh gosh, no, oh no, I said the word. Oh no, I've been watching too much YouTube. All right, so Google, I have to really take a look at it again. I have a video on Google, despite it being one of my largest holdings. I said at the time it was overvalued. That's why I say I think I can claim to be kind of sort of objective, that I will hold the stock, have it in my portfolio, it being the largest position in my portfolio, and then me verbally state I think it's overvalued. All right, because I'm trying to remain objective. Let the numbers speak for themselves, not my personal opinions. My personal opinions, I love the company. I would love to own more. So yeah, please come down. But there is a price. I'll have to do another video on Google. It deserves another video. And in fact, I should do a video with their next earnings reaction as this new format, since it's being received so well by the community. I think it'll provide a lot of value if I do a live earnings call reaction. All right. So I feel like Facebook stock would be buy because of the value, but no one wants it because of Mark Zuckerberg, because he's a lizard, because, lizard people. He's a lizard. Lots of lizards. Okay. So SWK. SWK has been requested an absolute buttload on the channel for an update video, because there's like a one video on the channel on SWK. And at the time it was overvalued. Now it's fallen nearly 50%. Let's actually pull it up. SWK, here we go. So down 5% again today. I went a little bit too far, but you can kind of see where the video, I believe, was around here. It was within this time period. That's where the video was made. And then this massive drawdown happened. Well, SWK, a little bit of side commentary to give you guys a little bit of content, at least on SWK in advance, is that this is a company that is heavily exposed to recessionary pressures. So if there is a recession looming on the horizon, something like SWK is what would get hit. And I think we talked about it a little bit in that video. I have to rewatch the video to kind of recall precisely what was talked about. If I didn't say that, my bad. Should have probably addressed that in more detail. But Stanley Black & Decker, because of what it is that they do, the business lines that they're in, you want to actually do that. And then when the times get tough, when things get gloomy, which right now, if I plugged them into the model, they would actually come out not so favorably. So you know what? Let's bring out the model. All right, let's go 150%. Let's see here. So okay, so ICI, SWK. That was from the video that's uploaded, by the way. So ignore all this. Ignore all that. I just want to show something. Go. Is it already there? Oh, it's already there. I think it's already there. Yeah, I think this is already there. All right. So, yeah. So on a gap basis, it looks cheap, and it also looks cheap on the Googles. And so on the cash flow basis, it's when it actually is absolutely getting wrecked right now. You can see it right there, wrecked. Boom, done. And of course, analysts are expecting kind of like a recovery. So when I do this one, I'm going to have to assume like some sort of recovery measure, or I can just smooth it out, and I can just indicate to the model to just smooth it out for me if I'm lazy. But I can do whatever. So that's what I'm going to have to contend with, because basically in this slowdown, they are expected to have like a massive drawdown. Why is Unum here? Oh, this is what I was at. All right, but yeah. OnlyFans is going public. I did not know that. Oh, wait. I skipped over your other one. Sorry. Apologize. Don't hurt me, please. Please don't hurt me. All right. So Signature Bank. Oh, I've never heard of Signature Bank. So I can't comment on Signature Bank. But yes, they're probably massive drawdown. Yeah, massive drawdown. All right. So if they have anything to do with consumer lending, it makes entire sense why they're coming down a lot. Okay. I'll just say that. I don't really know the nature of their bank, but it would make sense. All right. So OnlyFans going public. Really, I mean, I did not know that. Okay, so if you sell a put and it expires, you're required to purchase the shares. You don't pay taxes on the received for some. in the money. I'm pretty sure you still are required. I'm not your tax expert, but I'm pretty sure. I have to brush up from my tax class. I'm pretty sure you have to declare that as income, the put premium. That's what makes options like eh. So you do have to declare the put premium as income. I think you get like a little bit shafted on that deal because let's say you get well, you're saying in the money, but no, I'm pretty sure you still pay. I'm pretty sure the premium still pays. That would be a tax CPA, not just any CPA, tax CPA question, or someone who's just like refreshed themselves on that part of tax class. It seems like Google is the furthest along from the robotaxi with WMT. Yes, thank you, Andrew. Thank you. So yes, no, Waymo. Do not underestimate Waymo. So I'll say that the potential. Oh, and I see some people just send me what I needed. You gave me what I needed. All right. So the potential Tesla becomes a robotaxi network is there. I mean, I enjoy the auto drive features. And for my new one, of course, I'm going to be doing it differently. I'm going to be doing it through the subscription. So then I can, sometimes use it, sometimes not use it. Just depends because I don't really care for it. It's kind of like a gimmick at the point. If they actually achieve fully self-driving, maybe I'll think about it. But like, there's also like, I've had a ton of conversations with people who work in Lidar. There's also some nuances with regulatory reform, like perhaps even regulatory agencies say it's not good enough to have cameras. You need Lidar. And I think there's been comments here by people who work in the field in some of the videos regarding the complexity of, relying on cameras is very difficult to say the least. And there are technical reasons as to why that is. And I think Elon Musk's commentary on Lidar is perhaps going to be a little bit incorrect. And actually precisely from, what's that called? What's that law called? Dang it. What's that? Rights law. So rights law is something that ARK Invest always uses to justify that Tesla is going to, improve. And you'll see that in the commentary tomorrow on ARK Invest's reaction video. But rights law is used to justify that Tesla is going to lower their cost basis on the cost to produce vehicles over time. And it's all well and good because if you check out the rights law, that's the implication of it. That yes, it does. So Elon Musk stated that Lidar equipment was very expensive and not practical to implement into vehicles. But that's again, we're ignoring rights law, right? I say rights law can be ignored or over applied in both directions. So, but rights law with Lidar is showcasing that it's the case. So more and more vehicles right now, the expensive vehicles have fully decked out Lidar equipment. And then Lidar is actually getting cheaper and cheaper to actually integrate into a vehicle. And as that happens, it's going to be more and more accessible. And by the way, Tesla is testing Lidar. So the implications of how that will pan out when, people who are sold the self-driving capabilities, but then end up not being able to use the self-driving capabilities. How does Tesla get out of that? Will that be a legal issue? Will Tesla do a mass recall, install Lidar equipment to all of them of some sorts? Or just like we all get shafted in that sense. And that's why I'm not going to pay for full self-driving because, for example, we're, there was a clause in the contract, which I got to read the contract when I get to that point, that, barring some regulatory reform, they're not responsible for that. It could be that, but I either way, it's going to be an S show, so to speak. Great content again, Fabio. You definitely deserve more subscribers. This is really good content. Oh, thank you, Echoes from above. He has a YouTube channel. You should go check him out, guys. Just out of curiosity, what is your background? I'm assuming it's in finance. It's in finance and accounting, but I currently work at a firm where I do not manage, but I work at a firm where we as a team manage the assets of the firm. So the firm, not to talk too much about my employer because they wouldn't like that, but they have a primary business that is completely unrelated. In fact, maybe in the next live stream when you come on with Strongman, usually after hours, I can give more detail because it's in privacy. But I spoke to the others about it, and basically we invest the excess capitals from the business into various assets, either private businesses, public businesses, real estate, commercial real estate. More recently, it's been actually in warehouse real estate for the past couple of years. But regardless, that's not the point. And then I'm actually switching employer soon. I might come back because actually one of the ways they paid me was equity. But regardless, neither here or there. Just thought oh, I already answered that question. But yeah, my educational background is in both accounting and finance. I have a degree in accounting and finance. I'm actually going to get my CPA this year. I actually got put into a program by my next employer into this accelerated program. So they're basically going to accelerate me into the CPA, or they're going to basically help me throughout while also paying me to study the CPA, which is really awesome. So that fun fact, guys, fun fact, I will be a CPA as well, but only because it is what I'm going to do. They require, legally speaking, for me to be a CPA, which I'm doing it for a lot of experience. I'm actually getting a pay cut, by the way, going where I'm going, but I'm doing it for the experience. All right. So late ignore talked about LEG. I know you are watching this though. Thoughts? Okay. I am watching Leggett and Platt. I think Leggett and Platt just got creamed or something. Let me see. Let's check out LEG. See, I love using Google. You see, I'm basically shilling Google in front of you guys. It's subliminal messaging. Basically, what I'm doing is I'm showing you how good Google is to look up stocks. All right. Look at that. Look. Go use Google. You know, DuckDuckGo, DuckDuckGo. Using that. Google's superior. All right. Anyways, Leggett and Platt. Yeah, I am watching Leggett and Platt. Leggett and Platt hasn't had its own video. It needs its own video. It's kind of like these distressed industrial names that I'm actually really interested in. Expressive, I haven't pulled the trigger, but yeah, crowd. Ooh, I mean, like, okay, CrowdStrike is, I think it's just not the right price for me. Okay. But it is a very exciting company, growing very fast. Endpoint solutions security is, the next hottest thing. They're one of the best at what they do. There's them in Sentinel One, which I think is ticker symbol S. This one has done nothing but gone down. Yeah, it's just, just bleh. But this one was crazy overvalued at the time. This one's actually showing a lot of growth. So this one's like an early version of CrowdStrike. I would try to compare the two, knowing that the preliminary thought is that CrowdStrike is the higher quality, the one that's already been in the game for longer. Sentinel One has to prove itself, but I'd pay attention to both of them and kind of make judgment on them, because I think Sentinel One is touted as the smaller version of CrowdStrike, the up and coming CrowdStrike. And the thing with these technology companies is that you always have to keep up to date with technology, kind of improving. And if you don't, you're going to be out. European on my boot. The little girls aren't selling, I guess. Any chance you can review Tesla and at what price you would be willing to risk to buy a Tesla? Okay, so I have a very long video on Tesla. It's about an hour long. It basically takes into account all the bullish case. I can do an update on Tesla because I always like to do updates as I revisit companies when I make a statement on them in the past and then revisit them into the future. Because I mean, it's very difficult, and I try to do it as humanly possible because I always have to also make newer content for newer thoughts, not just address older thoughts and then update those thoughts. So it's kind of like almost like running a miniature research firm or whatever. Not really, because I'm not really providing like the actual documentation, but I might do another update on Tesla. I have to see what the price action was around Tesla. So either has to be a lot up or a lot down for me to really constitute an update, and something has to have drastically changed. So for now, I'll point you to that video. It's about an hour long, I know, but I think it has timestamps. So I think you can move around it. And yeah. Otherwise, watch out for an update. Still income. Yeah. So yeah. But not premium, just gets adjusted on cost basis. Oh, that is right. I think that's actually the case. I think I remember that. Yes, I think I remember that from my. Oh, okay, because it's been a while. It's been a long time since I studied tax law, so I'm pretty sure that was like that's the case. Yeah. So you see, that's why I said you have to ask a guy who's working in tax, right? Working in tax and actually doing those kinds of taxes. So doing that with having that experience, okay? Because it can be very confusing. So I think Abe Z might be correct. But yeah. Okay, so to do it's confusing, but you would still be down in paper loss, but can't deal with tax. Thanks for the answer. But I don't know why my brain is saying that. Are you sure like that's not like considered some taxable as income? But maybe the put premium is that only calls. Oh gosh, yeah. Tax has sometimes some confusing and contradicting parts to it. Go figure. The tax code is so big. But that's again why we hire professionals to do it, or who are working in that. No, I do not work at Markel. I wish I did. I wish I did. I would totally work for Markel. But no, they're not even based out where I am. No, I work for smaller one. Arc, my curve arc uses the truck stop. But back to this, I would like if Markel, if someone at Markel is listening, I'd work for you. Trust me, I'd work for you. I'd move. I'd totally work for Markel, because Markel does what I love absolutely at like such a scale. And yeah, but at the same time, if I did work at Markel, I'd be like probably one out of a smaller group. Well, no, just one person out of a bigger group, because it's probably a lot of more people there. The big K. Yeah, you're hinting at it. I mean, taking reg first time on the 31st, already passed far and odd. Can't wait to finish this. LOL. Yeah, so I'm actually scheduled to take far and reg pretty close to one another. I know those are the hardest, and I'm going to do audit before I start the program. So I'm starting the program. They're going to basically push me through it and pay me while I'm there doing that. And they're bringing in like tutors and stuff or whatever to help out. So it's pretty good. So it's a pretty good deal. You get paid while studying. So it's pretty good. But yes, it'll be useful. And then I'm going to do business while I'm working, because it's fine. That one's fine. That's just going to be a review of anything. Fabio will not be a CPA, but a certified CPA accountant. Yes, absolutely. Thanks for answer, bro. You're honestly one of the best. Oh, thank you, man. Very few people on YouTube actually learn legit things from. I'm subbed and have notifications bell on. Yeah, heck yeah. What are your thoughts on exchanges, business models, and money printers? Money printers. They're just money printers. They just buy and sell, buy and sell. Well, they're like the intermediaries. They don't buy and sell, but they're the intermediaries. So they just print money. It's amazing, absolutely amazing. I love those. But I'd have to own them at the right price. Of course, they're set for disruption. Like if my overstock investment does well and does what the potential lives up to, which it might not live up to that potential, by the way, it could just crash and burn and die. But if it lives up to that potential and it actually executes on all cylinders, it's coming for their money. It's coming for their money. All right, sweet. I'll watch it right after the live. Love your work. Great way insight. No, thank you. Thank you for, I'm glad that you enjoy it. Sweet. I'll watch it right now after the live. You'll love your work. Great insight. Oh, I just read that. Wow. You see, that's the brain fart at the end of the day when I work all day and then do a live stream. Just completely reread their message. Tesla was kicked out of the S&P 500. Yes. Said that at the beginning. Yes, and it was. Do you actually work for Markel? Do you actually work for Markel, Julius? If you did, like, do that, like, now. If you actually work for Markel, do me a solid. All right. Thomas Gaynor. Wow. Yeah. I watch pretty much all his talks when he gives one. Because he's one of the quote unquote super investors. Do you know why Tesla? Do you know why Tesla was? Oh, that was a comment to someone else. Anyone else stacking Matthew, you always make me laugh with these comments. Yeah. Do you think the U.S. GDP markets will maintain their growth for coming decades? How likely is it we become personally like Japan, I guess? Yeah, because that's what Japan. Okay, so I think it's there because, okay, so the mechanism of how the financial system works in the Western world, they all kind of work similarly. And that's where I'd get to the Julius, you really got me. Julius, the disappointment. No, I'm kidding. It's okay. But anyways, I'd say damn, Julius, you really threw me off. I'm just kidding. But no, in all seriousness. So I think the potential is pretty likely if you really kind of start to think about how each financial system works. So the Japanese financial system is emulated of the Western financial system. So it's very similar. So the way how the central banks acts or actually works through the plumbing of the system is very similar. So if we see declining population growth, that would be like the biggest red flag, because right now the United States still has not rising, but still population growth. Japan doesn't. Japan has stagnant and declining population growth. And so that's a little bit worrisome. I'd say that to answer the question, to not make it a long drawn out answer, yes, it's likely. It's likely. All right. So, got any favorite podcast, finance or non-finance related? I think it's kind of vanilla to say the Joe Rogan podcast is like a podcast I listen to, because I think everyone listens to it. It has like 200 million people, but I like that one. But that's a non-finance podcast. I don't really listen to finance podcasts. I think I drown myself too much already in the considering everything. I drown myself too much into the finance world. So I try to listen to like different types of information here and there. And oftentimes I try to find out what, more than anything, I try to find out what does the people out there, what do they think about topics? I like to try to find that out. I want to find out what are they thinking at any given point, which is one of the insights that I derived was, again, from the investment in oil, was that the people in general were thinking, and not just anyone, even managers, asset managers were thinking that. So yeah. In Japan, they require people to pay interest in the bank. Yeah, in the bank. Oh, Patrick Bet David. That's another one. I just saw that one just now. But yeah, that's another one that I like here and there. Like I liked his like mafia interviews, guilty pleasure. But yeah. All right. So in Japan, they require people to pay interest to keep money in the bank. So that's a very desperate effort by the Japanese government to try to enforce spending, because they need spending to grow in order to get their economy functioning. All right. Or not functioning, but at least growing. So the probability that they actually get through that, I mean, it doesn't seem to work. That's the problem in Japan. It doesn't seem to work, which is kind of a stark situation if you think about it. Like what can we do to spur growth? It seems like, but if you take a look at Dr. Lacey Hunt's work, Dr. Lacey Hunt will tell you, well, it's actually the counterintuitive measure. It's the government debt that's causing the lack of growth in a lot of ways, because the government debt is like a vacuum that's like absorbing all the attention away from the private sector, which is inherently where the growth should come from, not necessarily from the government. The government has a negative multiplier, while the private sector has a positive multiplier. So, and intuitively that makes sense, because I think like, okay, a government entity has no profit motive. Profit in philosophical sense is a measure of efficiency, because if you earn more than you spend, that measures efficiency use of energy, efficient use of resources. And money is just a representation of resources, of energy, of whatever it is you want to call it. So, if you don't have the incentive structure in place to create efficiencies, obviously you're not going to be, as efficient. You're probably not going to grow. And malinvestment is always, for some reason, misjudged by people. They never grasp the issues with malinvestment until it, rears its ugly head, which is often some things I talk about a lot. Malinvestment is very, very, very dangerous, and can cause a lot of problems if you're not careful. And people never pay attention to malinvestment. So current, more modern example of malinvestment, I mean, government's physical spending just randomly, willy-nilly can cause, this level of inflation in some areas. Malinvestment in terms of also restriction of resources can cause problems, such as lockdowns. Some countries, like I think Sweden, like they didn't lock down. United States did some levels of lockdown depending on the state. And depending on the state you live in, you have varying levels of economic growth now. So where I live, we still have actually crazy amounts of economic growth. We pretty much didn't lock down at all. And it's actually quite staggering, for example, despite interest rates rising, what the real estate is doing. It seems like we're having more and more people from up north or from the west kind of move in every single day. Like I told you, my next door neighbor from California, he bought that house cash. Neighbor in front of me from New York, he bought that house cash. I had conversations with both of them. They're both older than me, and it was very interesting conversations. And I was like, what brought you here? So, varying opinions there, but I'll leave it out, but whatever. Okay. So Patrick Bet David. Yeah. So yeah, just that one. If you had to go all in for 30 years, VTI versus VT, which are you taking? So if my goal, and actually I'll state this, I'm actually going to start a brand new portfolio. And the new portfolio will be actually the capital mindset portfolio. So you guys notice when the name of the company that
kind of operate this thing under, this content under, is actually Capital Mindset Holdings LLC. The reason why I call it that is actually because over time, I'm actually going to use this as an investment instrument. And so I'm going to be investing through Capital Mindset Holdings LLC. So one of the things I had to do in order to regain status with the bank was transfer a minimum amount of assets into the company's portfolio. So the company is now going to have a portfolio of assets, and any income that I actually derive from Capital Mindset Holdings will be there. Okay, and actually, right now the number one provider of income, which for now is actually a consulting service that I do for a company, but that money now is going into this portfolio. So I'm going to actually be redoing another portfolio. So why I'm bringing that up here is that VT or VTI are actual potential places where I might just invest the company's portfolio, because my goal is not necessarily to massively outperform, just perform at scale and just maintain value. That will be pretty much the set goal. I say that, but it's not going to end up being the case, because I'm going to be like, no, I'm going to invest into different stocks. But if not, it's going to emulate my portfolio. But I'll let you know if that. But I was contemplating it. So that my answer to your question is because I've already had this thought. And then my thought was actually I would take for the purpose of reducing volatility and basically quite literally allocating capital on a broad basis of assets, VT. If you're focused on the United States supremacy measure, VTI. So it just depends on the perspective. But like VTI might outperform VT, but you have to understand the goal of each. VT is to broadly diversify, except, this is the argument. The thing is that, like, let me pull this up again, because I did talk about this briefly, but it's good to remind everyone, or not at the very least, highlight it further. So you can see the two of them right now. So Vanguard Total World, Vanguard Total Stock Market. You can see which one. Well, that's the 5-year. You can see on the 5-year, right? Vanguard Total World has outperformed VT. Okay, so this one's up 60%. The other one's up 32%. Now take a look at in terms of volatility. All right, so I'm probably gonna eat my words, but okay, no, I'm right. So on a volatility metric, they actually kind of follow each other, because if you actually find out what's actually part of Total World, but the volatility should be slightly lower. Okay, and then you might say over the max. Okay, but the problem is Total World is newer. It's not as old as VTI, but I bet you if you kind of went back way back then, you would have some decades, and you've isolated decades. Some decades it would outperform, some decades it would underperform. But more recently, in like the past 20 years, you'd have like a supremacy. Actually, if you go back here, you had emerging markets outperform. This was the emerging markets era, and I remember that era. And then it was followed by American supremacy during this decade. So massive outperformance by VTI. So it would just entirely depend on what your necessarily goal is. VT is literally the most set it and forget it. But yeah, you are going to be more skewed towards American companies because they're all market cap weighted. And by the way, if anyone is curious, go check out the video that I made. Actually, let me pull up the video because I know that it's going to be difficult to find sometimes if you just Google it, because I'm not that big of a YouTuber right now. So my content isn't like so easy to find. But there's one particular video in which, actually, it's probably easier if I do it this route. Let me go here. Videos. I'm just going to highlight this and show my own video, but because I think the information in there is pretty good as far as how indexes work. I don't think it's talked about enough. It's kind of like the dark side of indexes. If I'm going to hype it up, I'm going to hype up the where is it? Come on, where you at? Buy the dip, must watch. Okay, is it soon? It's soon. Where is it? Oh my gosh, where the frick did I put it? All right, ETFs. Okay, so there's I'll just Command F it. Okay, apparently it's here. Where is it? No, that's not it. All right, I for some reason I cannot find it. Oh wait, there it is. Yes. Okay, I found it.
So here we go. I'm going to pull it up and played it. Excellent. Okay, I'll show you guys here. So this is the video. So it is called Looking Behind the Curtain Index Funds. Terrible title. Now that I'm like kind of getting better at it, this is absolutely garbage title, and it deserves the only views it got. It only got 290 views back in January 2022. So this video actually gets into the inner workings of how ETFs are. Oh, and it has no chapters. So like, yeah, to make it better, it's a 30-minute video with absolutely no chapters. So I'll just kind of like tell you where to go because I'll be considerate of y'all's time if you are curious. So I think like, yeah, around 16-minute mark, you'd be fine with, no, actually, this is important to explain. So you want it like here, the 13-minute mark is fine. Yeah, 13-minute mark is fine. And then from there on, good content if I say so myself. All right, so where did I leave off? Oh, it did it again. Okay, so personally, I do. I go to the grocery store for my research. I mean, yeah, some people say that's enough. PD Pirate David is another scammer. Oh, yeah, because he has that MLM aspect to him, right? That's what I also saw. I think he's going away from that. But yeah, that is something like that's why I'm never gonna engage in that. I mean, well, it shows that like the world is like really forgiving, but I don't want to engage any of that because I want to have like a clean slate. I don't want to make people mad at me. Don't want to screw people over. Especially like I don't understand like why someone puts themselves out there on YouTube and then just like screw people. And it's like, I don't want to meet up with one of you guys and you guys be like, like you see me in public and you're like, hey, that guy screwed me. Like, oh my gosh, like that'd be terrible. I wouldn't be able to like walk around and be like, oh, like, I don't know. I wouldn't know how like Jeremy walks around. Okay. Graham Stephan hasn't screwed anyone. So like, he's like chilling and people kind of look up to him. But someone like Jeremy, I'd be like, oh, who's behind me? Like, I don't know who I screwed. Yeah. So I don't understand people. Lambo or Ferrari? Oh, Lambo by Volkswagen. Ferrari. I'll take Ferrari. But to be honest, Ferrari has more of the culture, but Lambo, I love the story of Lambo. Lamborghini's story is pretty interesting. Actually, trolling guys are the best car brands. Maybe. Also, do you see the new Lotus? The new Lotus is really nice. Also, do you think China is uninvestable like JPM? Personally, ADR VIE system seems very convoluted with very little investor. Oh, Abe. Have you seen my video series? Anyone in this comments section will probably tell you all the content I have made on the VIE system. Go through my channel. There is a massive amount in terms of hours of content talking about this. And oh yeah, I'll just say that because I made a vow not to talk about it until like the stocks are up. But like, if you're asking me, you're kind of provoking me. So okay, I'll talk about it. Yeah, no, I don't like the VIE system. There's a whole thing I'll get into with the VIE system, but you get me going on the VIEs, we'll be here for another hour, and I don't have another hour. But I recommend just go check out the content on the VIEs. Probably like, yeah, it's there. I don't know if that's why you're asking, but yeah, anyone in here probably can, if you ask like, oh, what has Fabio said about the VIEs? I probably bored them to death with how much I've talked about the VIEs. Okay. And I was talking about the VIEs when it was less popular to talk about the VIEs. Now everyone's talking about the VIEs, right? And like, but the intricacies of the VIEs, because there's a particular thing that people like miss out or like leave out. For example, the Hong Kong ones are not part of the VIE, so they're part of the VIE. You can't exit out of the VIE. Okay, so Rachel in New York, California, moving to where you are sounds like Naples, Florida. No, I don't live in Naples, Florida. Don't live in Naples, Florida. But Naples, Florida is growing a lot. Same with Miami. Miami is growing a lot. Actually, my sister-in-law, her and her boyfriend got priced out of their apartment in Miami because the prices went absolutely ridiculous. And so they still have a very nice apartment. But still, like it's gotten ridiculous. Like I think it went to like, I don't know if I should say numbers, but like, whatever. You guys don't know them. The rent went up to like 20 grand a month, and something crazy. I was like, what? That's Manhattan levels. So yeah. All right. So Fabio, you say that gold is a sensible purchase, especially in this environment. Look, I like the thing about gold is like I buy gold because it's fun for me. That's the extent. It's accidental that I own gold and that it's potentially rising in value. I own now, I guess, like because I buy it for the like I like gold coins. I don't know. I like shiny rock. I succumb to the senses, the animal urges, the animal instinct to collect shiny rock, hold shiny rock, caress the shiny rock, and then stare at it. And my wife goes, "What are you doing?" And I just hiss at her. I just like look at her and I hiss. And then I go back to staring at my shiny rock, and she turns off the lights, leaves me in the room alone with my little flashlight so I can at least see the glimmer on the gold. I'm joking, of course, or am I? But I would say that if it makes you feel better, maybe there's a feel good factor to hold gold. I prefer to own productive assets, but I can't say that I don't own gold because I do own gold. Okay, so index is meh. You can destroy it with your emotional control and knowledge, Fabio. Why buy an asset that grows as 4% when it's at like 19 earnings? I don't know precisely. Yes, no, and exactly. Go watch that video and you'll find out all about PEs and indexes and all that. That's why when someone says the P of an index is, and I'm like, what do you mean by the P? Because that was actually a question that Cole sent me a message the other day. He was like, what is the historical PE of this index? And I was like, what do you mean by that, Cole? Because there's multiple PEs, and that in that video I go over that, and people have watched that video and they comment, they're like, I never knew that. And I was like, yeah, because it's not really talked about. And again, it's like the video only has what, like 200 something views, so only 290 people now learned how to calculate the PE of an index, and actually less than that because I think in this video I was so like, it's such a boring video. Not everyone got through the whole video, so like I'd say not even half of those people learned how to calculate the PE of an index and how like convoluted it really is. So of course, based on some of the comments, some people did. Actually, no, Tora, you saw the vid because actually there's your comments in there. So yeah, you saw the video, but yeah, so there were some interesting math questions because I saw that some people had. But yeah, I agree. Last question for the night. Do you think mid cap stocks trade so cheaply now because the declining or flat earnings are being priced in as a result of these margins from inflation? Okay, so with regard to small mid caps, they're going to be suppressed for a little while there's uncertainty within the market because they don't have the ability to kind of make the adaptations, or they don't have the exposure to multiple different jurisdictions. So they're a little bit more squashable, so to speak. So yeah, mid caps, small caps, traditionally they'll underperform in these environments. But the ones who you do pick, which by the way, there was a comment I wanted to address that yes, absolutely micro caps, which I don't really speak about much, but the micro caps or small caps, there tends to be an opportunity to have outsized returns because there's less competition from analysts to evaluate these businesses. So it gives you more of an ability to find these stocks before they're quote unquote found, if you know what I mean. So I'd say that if you're really dedicated, really dig into small mid caps, really find the diamonds in the rough, and then be very comfortable with the price allocation you decide, allocate to them, and be responsible about your allocation, by the way. And yeah, you could find yourself doing pretty well. But yeah, I hope that answers your questions. And thank you for your second comment. Thank you. Makes me feel good. I'm glad you're enjoying the content. And so rocks, I painted summer rock silver. Can you imagine? You're just like, you fly to Vegas, you're like in the corner, you're like, hey man, I heard you're buying silver. And you're like throwing the rock up and down, catching it. And it's just a rock that you found on the street. You just painted it silver. Oh my gosh, that would be so funny. Very kind. Doesn't make sense for them to reinvest. Yeah. Okay. So V for valuation is making a good point there. Yep. And I'm sorry if I missed your question, Matthew. I guess he's answering your question for me, but yes, I'd agree with that. What penny stock should I dump my life savings into, Voyager Digital, or should I wait for TCFs to go below $5? Look at that, because like Tattooed Chef, when I originally made videos on Tattooed Chef, and I'll actually like let me find the original videos on Tattooed Chef, because geez Louise, that's like long time ago. And I remember when I was with my ex co-host Austin, he was like, we shouldn't do videos on Tattooed Chef. I was like, why? It's like, because we're gonna get like absolute pooped on for that, because it's a cult stock. And I was like, no, we're not. And then we did a video on Tattooed Chef, and I remembered we did get some poo-pooed on it, because it was funny. We only had 141 subscribers on the first Tattooed Chef video. 141 subscribers, and I think one of the price targets was like $2 a share. And it looks like we're getting there. So let me see what like the actual ones were. Yeah, $2, and then the high scenario was $4.60. Not high scenario. The high probability scenario was $4.60, and then the second high scenario was $7.82, and then we created a more mid scenario. Okay, yeah, this one was like the crazy one. Let me see this one. I'm trying to find the one where, yeah, there it is. There it is. So basically, once I include a margin of safety, I have scenario 3 was $5.15. Scenario 5 was $1.43. Scenario 4 was $2.37. Scenario 4 was using historical growth and kind of implying it forward. Scenario 3 was a little bit above historical growth. So we're basically at scenario 3. We're below scenario 2. Yeah, so that's interesting. I might, just for the shits and giggles of it, just go buy some Tattooed Chef and eat it. I've been entering or regaining my old diet, so then I can basically lean out all the way again. But yeah, so I'm avoiding stuff like Tattooed Chef. Ugh. But in terms of like quality of food, entering my biological wetsuit. I'm a lizard, if you didn't know. All right, so it's the future. Woo! Yeah, that needs to be a skit. All right, so there's a good chapter on management shareholder alignment in Good Stock Cheap Lawrence going to do your show. Yes, that is actually a good read. That book is a good read. It's been a long time since I read a good book. I need to find another good book to read. I haven't read a book in a while, to be honest, and that's sad. Voyager Digital is stupidly discounted, in my opinion. I mean, my opinion is now public because I just released the earnings call video. Now, if I were to I just don't want to hold an asset like that personally, but that's just me. I mean, you might find value in it, Marquez, but I don't really find value in it. All right, so I'm going to be doing wrap-up questions, by the way, because then I got to get back to work. So love TCF. Buddha Bowls are amazing. Absolutely. You want to see a bloodbath? Go look at Beachbody, worst SPAC of last year, I think. Oh my gosh. All right, we'll pull it up right here for everyone. So let me pull it up first. So Beachbody stock. I probably have to type it in here. Okay. Beachbody. Oh gosh. All right. So let's share the screen. Share screen. All right. So wow, actually. Well, I don't know if this is the worst one. Yeah, I don't know if this is the absolute worst one, but it's pretty bad. It is pretty bad. Yeah, there's a lot of decently bad ones right now. Yeah, a lot of the SPACs absolutely got creamed. I mean, I hold one of the SPACs that got absolutely creamed. It's this one, the fun stock. BurgerFi International. This thing SPAC'd out at like $15. It's like $3 right now. So let's pull that up. Let me pump BurgerFi. We can all. No, I'm kidding. Joking. SEC, don't kill me. SEC like breaks down the door. You hear SEC, open up. And there's like armed security guards just come in, arrest me, trying to pump BurgerFi stock. Yeah, because it's really small. So I don't recommend this one, guys. Just for fun. But yeah, I think it IPO'd like around here, and then just look at that. Just look at that. Oh no, it's still not down 90%. Because what was the other one? The other one was down, yeah, basically 90%. Basically the same thing. Pretty bad. Both of them are pretty bad. Oh, Desktop Metal. I just saw my eye just went right to Desktop Metal. Oh, we're doing that. We're combining companies. We're merging companies. We're doing some M&A. Desktop Metal. Oh yeah. I mean, still not as bad from SPACing, but from all-time highs, yeah, definitely. Look at that, 93. We're just competing for the worst stock now. That's where we've come to, competing for the worst stock. Eat my Buddha Bowl, watching financial education, very bullish about financial education. Palantir would probably be the only company out of the hype YouTube stocks that I would buy if it was a micro cap. I mean, Palantir might get to the price where I said it was like interesting to regain. Yeah, it's down 4% today. But yeah, Buddhism is increasingly globally bullish on TCCF. Yeah, the thing is about vegans, man, they're not gonna eat tattooed chef like people think. They're gonna eat healthy food, right? That's what they're gonna eat. They're gonna make mostly their own food. A lot of vegans, they didn't do enough like market research. I mean, well, is it really vegan? I thought it was more vegetarian, the tattoo chef. Maybe it is vegan, but whatever, it doesn't matter to me. I don't really care. Capital Mindset IPO. If the Capital Mindset Holdings portion ever became like large enough, I would IPO, because I don't want to manage money. I don't desire that. But like if it ever became like an IPO thing, like where the company grew to a certain size for whatever reason, as like an asset manager of its own assets, like I would probably IPO it, make it a micro cap, and just totally just pump my stock on my YouTube channel, just grift like crazy, just going like, buy my stock, bro, buy my course, bro. And then like the course money just flows into the portfolio. And then I just pump my own stock through the courses. Look, I'm already planning this out. SEC, you got to come after me now, because I'm already planning this out. It's going to happen. Once Capital Mindset hits like 200K subs, I'm IPOing, and then we're just pumping my stock, and then stock pump and the videos pump my course, and my course pumps my stock. Just, continuous flowing. We just issue shares like crazy. And the only stock we buy is the I don't know what we buy. But no, it'd be like cool one day when I'm older, just like an old Fabio, just like sitting here, just like this is the earnings call. Earnings call is this live stream, and I'm just like talking smack. That'd be a funny future. All right, so Kevin, when pumping the stock, even he interviewed the CEOs like twice. What stock is that? I know he did like what's that one called? Archimoto. What's that one? FUV. How do I know this? Why do I know that? Shouldn't even know that. Yeah, Archimoto. This is stock I should forget. I don't know why I know the ticker. It's taking up space that otherwise could be occupied by another company. But yeah, I know he interviewed this one. All right, Jeremy programmed me this way. I don't feel the free. Matthew's funny. Fabio, what are your top 3 stocks that you're waiting for them to drop more so you can gulp and buy, I guess? All right, my favorite 3 stocks definitely right now is I have a soft spot for Alphabet. I have a soft spot for Amazon. And honestly, in terms of anticipation for buying, I would say probably you'll be surprised by this, but Warner Brothers Discovery, if I do my next analysis and I find I get really excited about that, I'm going to be excited to add to that position. Other than that, I'd say probably not so much like Netflix, but Netflix is getting up there. I'd say probably Adobe. Adobe, if it came down a lot, yeah, it could. I'd be very excited. I'd be very excited because I could actually bring it up to size. But yeah, Netflix is there. And as far as like the smaller companies, let me actually see my portfolio so I can like remember. You guys know South Park Memba Berries? I love that episode. Just a shout out to South Park. Memba Berries. Memba Chewbacca. Memba Star Wars. Yeah, I do. I have the severe case of Memba Berries. Disney, I'll always have a grudge on Disney. What I'll do is one day, if I ever somehow become a billionaire, just somehow, I don't know what society has done to give me $1 billion, but let's say it does, and I become such a billionaire that I can just affect stock prices, I'll just like dump on Disney. I'll buy up Disney, fire the board, just like be like, my revenge is complete. Just insanity. Just like put all my wealth into Disney, destroy the company, become broke. Just like my revenge is complete. I'm content. And then I die. That's how I end my life. All right. Enough of that. That's enough jokes. All right. So I'd say like smallest one I'd be excited for is Thor Industries, actually. Thor Industries at the right price. Oh, yeah. I love these companies that are overlooked. Same with AGRD. I actually have a soft spot for our AGRD. I'm actually really glad that I didn't actually get executed at all. Well, I de-risked it, so I closed the call position. I might actually, if it gives me the opportunity again, I'll rinse and repeat it, and I'll get another call position on it. But also, I have a soft spot for Boston Omaha, but I'm a little bit reluctant to like talk about it too much because it is something small. But that's like technically the mini Berkshire Hathaway, much smaller than Markel. I also have a small soft spot for Markel. I'm giving you more companies than 3, but like I would love to add a ton more to Markel. I would add a ton more to LYB. I love this company, even though it's like completely chatting out while the market's kind of dumping, which I like. My vernacular, if you notice, my vernacular is actually declining. So, you know, you guys have told me that if I just focus and bring down my vernacular at times, you know, like when we talked about financial education, Jeremy, I'll be more digestible by the mass audiences. So I'll just be like, yo, bro, we just gotta buy the stock, bro. It's getting late now. All right, Beachbody's meet Kevin stock. Oh, wow, really? What the heck was this stock about? Beachbody, what the frick is this? This is a Meet Kevin stock? Oh my gosh. See, like, I don't like, I'm gonna shout out Cole here. I'm gonna tell you, Cole has a private text with me where he just sends me, he's in the chat. By the way, wish him a happy birthday because it's his birthday today. So Cole, happy birthday live. But he sends me absolute cringe here and there. And he does it, I think, now for fun. I think he does it for fun, but he sends me like Andre, Jeek, stuff like that. Don't give him any more ideas of like Meet Kevin with Beachbody. What does this company even do? What is this? Streaming full body strength? What is this, a workout? Oh, that was probably part of his Piton craze. Piton stock. All right. Piton. Yeah, 14 down 14. All right. So yeah, absolute insanity. All right, so I guess Google, Meta, Netflix, maybe. Yeah, you guessed kind of right. You guessed 2 of them. Well, actually, Meta. Yeah, Meta's in there too. I didn't say Meta. I said Amazon, but yeah, Meta's up there. It's a lot, man. It's a lot. Like, you can't narrow down to 3. Yeah, Desktop Metal's a Kathy Wood stock. Kathy Wood. Well, she'll have a little bit of a roast tomorrow, but not like, it's not directed towards her. It's directed towards her firm. And it's gonna make sure I'm unemployable by her and maybe even like that whole industry, because, well, I don't really care, but I don't know if they come tomorrow and say like, hey, Fabio, we'll offer you, you know, a stupid amount of money. I'll be like, yeah, let's do it. I'm gonna need some capital mindset, preferred shares, just have preferred shares. LJK. I mean, preferred shares is a form of debt, so you won't actually participate in the economic gains of the firm. So I mean, sure. Give you a perpetual dividend. It was used to be the future. What's your thoughts on money will rotate to now? Well, money rotation, I don't really apply that to my portfolio strategy. I know that's disappointing, but I don't really. I mean, like, I say that, but you know, we talked about liquidity crunches and how I kind of rotated myself out, but I don't. It's like a secondary thought. It's not a primary thought, if you know what I mean. If I'm explaining myself right, it's not like the primary thought as to what causes me to buy or sell an asset. It's a secondary thought. So I don't really care what others necessarily are buying. But if I had to guess, right now money is going to be flowing into TLT temporarily, and then probably towards something safer. I bet you, not I bet you, but I think there's a good chance TLT actually does okay. So bonds, basically, for a variety of reasons. As I addressed in the beginning of this video, if lending growth continues to decline, banks are going to have to find a way to put money to work somehow. The bond market's going to be there. Oh yeah, Rivian was terrible. No, I have not covered MicroStrategies. Is that MicroStrategies? I got to remind myself. MNNST. No, that's Monster Beverage. Okay, Monster Beverage. MicroStrategies is the other one. MSTR. So Monster Beverage, I have not covered Monster Beverage ever, but I can do a video on Monster Beverage. Jesus, it looks overvalued. It's been a fantastic performer over a long period of time, but like, geez, man, I don't know. Well, that's just a preliminary look, but I can just kind of taste it. But it's gonna be like, eh. All right. Hey, I'm really glad I found your channel. Hey, I'm glad you found my channel. How about that? We're both glad. Marquez Ford, laughing. You guys are laughing at something. I work for the SEC, Fabio. Be careful. Yeah. Oh, I'm just catching up to this. Oh my gosh, there's so many comments. Okay. Like literally, where did I go? Okay, so just a vegan frozen food bowl by accident. It said chicken, and I said it grabbed it, and the Aldi brand sweet Thai chicken made fine grain. It was really actually pretty good, but not filling at all. Spendy. Oh yeah. Just ate a vegan food bowl by accident. Yeah, it's not filling. And I would say the vegan food bowls, they're not very healthy. Like, you know, it's better to cook your own food either way. Persico got paid to workhorse. Is that workhorse? WTHR? Well, no, that's not workhorse. WTRH. Yeah, that's not workhorse. What is this? Waiter Holdings. What the heck is this? It's a $32 million market cap, Cole. What are you doing? I member. Yes, you member. Oh yeah. Will you hang out with the other billionaires like Paul and Jeremy? Oh yeah. I'll hang out with the other billionaires, Paul and Jeremy. Yeah, Jeremy's going to be a billionaire. That's right. Will you find me out? Did you just say JHI? Like, let me find out. I don't know. Was that me? Getting delivered cannabis. I hear. Either way, they're screwed. Yeah. Okay, you guys are talking about other stuff. Fabio, when should we be anticipating the course on finance? I'm already filming the videos. It's just I'm going to release them all at once. So depending on how extensive you guys want them to be honest, because I was actually thinking about almost like replicating a college curriculum in finance. But then I was like, geez, I actually thought about this too. What I'm not going to do is I'm not going to actually provide. I'm actually redacting the part of providing entirely written material because I don't actually want anyone to take the material and copy it and then sell it, because then that's defeating the purpose. It's like using it for evil almost. So it will have the material visually, and so someone will have to really go out of their way to copy it down and then sell it if they really wanted to, because I really want to avoid doing that. And I thought about that in the midst of doing it. I was like, oh my gosh. So like if I create all these documents, I'll put on the work and then someone else will just copy it and then they will just sell it. And because it's going to be easily accessible to everyone, there's going to be the high propensity for that to happen because there's no paywall. So unfortunately, that's what I have to do because I don't want my stuff to be used for evil. But yeah. Yeah, it's kind of like stealing too. So I would want to give the thief, the potential thief, an easy time. Okay, so Crashy Wood. Okay, so I'm gonna close off with the last minute comments, guys, because I know we're approaching the 3-hour mark. So you can't say I did a short one today. P90X. Oh yeah, happy birthday, Cole. See, StreamYard, my StreamYard. Yeah, and StreamYard is gonna be like, you have to pay to have these long streams. So sometimes I can't do these comments things, so I'll be doing it from the other software. But the other software has higher quality visuals, so it actually is better in that sense. I love Med. I think that's Pet Med, I think, right? So Med is an interesting micro cap stock at this point. What is your opinion on the Fed minutes in July? They're probably going to raise rates by 50 basis points. And that's Austin Adams, everyone. The Austin Adams. Of course, I'm kidding on that one too, LOL. Mr. Fabio. Well, thank you. Hello, Mr. Fabio. Or not hello, Mr. Fabio. Hello, Mr. Austin. Exactly. He is the Mayweather of investing, supreme invasion of intellect. Capital Mindset University. Heck yeah. Honeywell, my bunny. Well, yep. We're just continuing with the names. No, thank you. Thank you for joining me on the stream, everyone. All right. With that being said, I'm going to close off the stream here and I will see you guys on the next one. The video just now dropped because it's 10 p.m. If you guys want to go watch that video, go watch it. If not, good night. And I'll see you guys on the next one. Bye.